We are live right now, Aaron. You're talking to me while I'm live on the stream. Sorry about that, everyone.
I don't think we're actually live right now, Spencer.
No, I think we're actually live right now. I was being just rudely distracted by one of my colleagues, even though he knows not to disturb me ever. But what's up, everyone? Aaron Bree's over here playing Wordle, but I'm over here trying to do a show. So this has been Benzinga Live. Welcome to the jungle. Smash that like button. Here we go. Big show today. We got like 5 guests today. A lot going on. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasik from Trend Spider. We have a breaking news. All right, what is up, everybody? As I was saying before I was rudely interrupted by that intro that I myself ran, we got a big show today. I'm very, very excited for our guests, Aaron. How are you doing on Wordle, first of all, since you seem to be very distracted? He's not doing well. Not doing well.
Oh, hold on. So I know I've got the O and the N. I know the T goes here, so I'm just trying to figure out.
I got Wordle on the last guest today. It was tricky. Anyway, while he finishes that, let me just go full screen on myself here. Big show today. I am very excited for our guests. First up, we're gonna have Asif Suria on the show. I've been getting his emails basically since I started at Benzinga. Asif Suria runs the website InsideArbitrage.com, is basically devoted his career to following insider activity, insider buys, insider sells. That's what he does. I would venture a guess that there are very few people out there that have a better understanding of insider activity. When I say insider, I don't mean like insider trades, like illegal stuff. I mean like the legal stuff. Mostly. There are very few people out there.
What the hell?
He didn't get it.
What the hell? Look at my last 2 guesses.
Aaron did not get today's Wordle, everyone.
What is it?
He still doesn't know.
Month.
He still doesn't know.
For everyone that has
he just ruined it for everyone.
I'm sorry if someone is. God, that's my second time in a row not getting it. I didn't play the day after.
As I was saying before I was rudely interrupted, this is a theme today. There are probably very few people out there that have a better understanding of the insider transaction universe than Asif. So I'm very excited to talk to him. That'll be at 11:45. We're going to talk to David Lee, not the former basketball player, but the president of AppHarvest. If you remember all the way back to, I want to say, Monday's show? Friday's show? I think it was Monday's show. We were talking about AppHarvest and their exposure to the global commodity squeeze. So we're going to talk to the president, David Lee, ticker APPH, at 12:15. 12:30, we're going to talk deal making, deal flow. What is going on in the Reg A space? We're going to talk to Aaron Shaften from DealMaker. We're going to talk to Adam Dell at 1 o'clock. If you're like, wait a minute, Dell, that name sounds vaguely familiar. Yeah, Adam Dell's brother is Michael Dell. As in Dell Computers, Adam Dell is also the guy that co-founded Marcus. If you know what that is, if you're a Goldman Sachs customer or client, or you have a Marcus bank account, he was critical in the formation of that. He's got a new company now called Domain Money. It's basically a crypto investing platform. We're going to talk to Adam about that at 1 o'clock. We're going to talk to Edwin Dorsey at 1. Is it 30? Yes, 1:30 today. He made waves a few weeks ago with a short report on Roblox. He's had some other stuff out since then. So we haven't spoken to anyone in a while. So I'm very excited to talk to him today. So we got a big show. 5 big guests today. I'm excited. Aaron's excited. You're excited. I can feel it. And yeah. In between all of that, we have some other things we want to get to, right? We want to talk about oil, talk about Netflix. Netflix is the title of today's show.
For anyone who was at live trading before this, did you get redirected here? Oh, there we go. I said it. All right. I was going to say, something might be playing a trick on us, but I want to share my portfolio real quick, Spencer, because I'm having a good day.
You're having a good day?
I'm having a great day.
Shelly wants me to take you shopping at Uniqlo. Again, Shelly, there are no Uniqlos where we are located.
I bought. Okay, actually, this is the coolest thing. So I was at a Uniqlo in Chicago a few weeks ago.
The Uniqlo, the one, right?
No, I think they have 2 in Chicago.
Oh, good for them.
I don't know. They have a
good for them.
I think they have like 100 locations in the United States. Not that many.
Really? I thought it was like 2.
I don't know. Let's check.
I know it's not 2. I thought it was like 10.
U.S. locations. I don't know. Let's check.
This is going way off topic here, but who cares? And then we'll look at the market, obviously, because we're green. Most places.
I don't know. There's more than 10.
Right.
There's not as many as 100. We'll call it 25. Either way.
Cool. Either way.
You're at Uniqlo.
Yes, I was there a few months ago.
Oh, you were?
In November.
Yep. Chicago?
No, New Jersey.
Okay.
Yep.
Well, the one in Chicago.
What do you got?
You know, a lot of stores have been implementing some form of self-checkout.
Yeah.
Okay, at Uniqlo, they have this bin, and it's like next to the computer where you pay.
Yes.
And you literally just put stuff in the bin, like you don't scan it at all. Like, so you have a T-shirt, and you literally just throw it in the bin, and somehow it knows that what T-shirt it is, how much it is, whatever. So and you don't have to do it like one by one. You can literally just throw like 5 things in the bin, and then it rings you all up. I thought it was the coolest thing ever, and yeah, it's a Japanese company, so
yeah,
some sort of like crazy Japanese tech.
I bought a sweater,
and
it's my favorite sweater.
Really?
Oh man,
I had the opposite. I bought because I was in Chicago. This was in November, so it was just starting to get like real cold in Chicago, getting cold up here. I was like, I needed a new winter coat. Bought a winter coat from Uniqlo. Have not worn it once.
That sucks.
I mean, it is what it is.
Anyway, what were we saying though? Your portfolio. That's what we're going with this.
Yeah. Which I did. So I'll just share my Robinhood, and to be fully transparent with the crowd.
Yeah.
I pulled some money out of my Robinhood because I'm going to transition to a different brokerage potentially. I kept some money in.
Do you want to talk about this or this transition in your life or not? Not right now. Have we decided?
So
where?
basically, what happened? No, well, I already have an account at Interactive Broker, so it'll probably be easier for me. I think I would like.
You fancy?
I know. I think I would like Thinkorswim more, but I already have an account and everything like set up for Interactive Broker, so I feel like it'll be easier. But my good buddy Brett Simba, who I'll get back on the show, he's doing a like small account challenge this week in his group, where essentially, he's trying to grow a $5,000 account to 25 or whatever, whatever it is. I messaged him because I was like, yo, I really want to follow along, but on my Robinhood, I only have 4, day trades I can make a week. How can I follow along if I'm below the PDT? And he texted me back and he was like, dude, I told you months ago, get off Robinhood, make a cash account somewhere else. And I was like, yeah. You did tell me that.
So you're doing it.
Well, I just felt bad because I was like, I'm asking him, like, what am I supposed to do? And he's like, dude, I literally already told you. So I pulled some money out of my Robinhood, but I had some left in there, and I used what was left yesterday to make some trades. I'll talk about those real quick. Well, I actually talked about them with David Green when he was on the show. So a couple weeks ago, when David Green was on the show, we were talking about Lockheed Martin. And even though Lockheed Martin was so strong, it had just gotten a little bit overextended. So I think this was March 1st. It got up to like 456. And so I bought some puts on Lockheed the next day. It opened at like, $10 lower than what it was, and ended up, of course, I wasn't thinking, okay, the strength is going to come out of Lockheed here. Obviously, with the war going on, you want to buy strength. Lockheed, Raytheon, all the defense stocks, all the oil stocks. We talked about those being strong. But even in strength, a stock can get a little too overextended and be due for a pullback. And so yesterday, we recognized the same thing kind of in Chevron, which I will admit, I think Chevron would have, had a pullback anyway, but obviously lucked out and got help with the Venezuela news, which we'll talk about, and why oil, traded down about 5% overnight. So yeah, I bought these Chevron puts, sold them this morning when Chevron opened down, which this is also another lesson. I wanted to originally I sold like half of them and held on to half because I wanted to see if Chevron was going to drop. Chevron opened down 4.5%. I wanted to see if it would drop, 5.5%, 6% potentially. But as you can see, I mean, Chevron's recovered really well since the open. So I'm glad that I ended up getting out of all those. But yeah, I mean, up about $1,800 today.
Nice.
All cash, right? Well, actually, I shouldn't say all cash. I do have some more contracts. I have this Netflix call that's up 400% today.
All right.
Baba call, it's up 46%. Palantir. Well, actually, the total return are still red, but because I bought them like 2 days ago, but from yesterday, they're up nicely. So I might sell those, but I'm pretty much, as you can see, my account portfolio value is like $3,500 right now. And it's pretty much all cash, 3 or 20, pretty much $3,000 in cash.
So do we think by this time next week we're gonna be transitioned to interactive brokers?
I don't know. That's a good question.
I've never been on IB.
You want to go on it right now?
I mean, I've been on the website. I mean, but I've never actually used the platform. I don't even know if I've seen IB before. That and Merrill Edge are kind of the two mainstream ones that I have no experience on.
I really wanted, for a second, my thing was it was like plus 1740. I wanted to get a screenshot of it at plus 1738. It was like a good Fetty Wap day.
Okay, I don't get that reference.
Okay.
Sorry.
Someone out there might.
Someone out there gets that reference. That's not me.
Fetty Wap, 1738.
All right. Oh, wait, yeah, the rapper.
Yeah.
Yeah, okay, yeah, I got it. Yeah. Yeah, the interactive brokers is as I understand it, the retail trading platform that gets you closest to like quote unquote professional grade.
You're talking about interactive brokers?
Yeah. It probably comes with and Shelly's talking about the fees. I think it probably is the top of the line in terms of functionality and features, order execution, for the retail platforms, right? I don't know how easy it is to use. I've never used it. Like I said, I can't really vouch for that. But as far as I understand it, if you're compared against the universe of the other retail brokers, interactive brokers, more expensive, but because it's a higher end product. So that's my take on that. But I use Thinkorswim. So for some things, I like it. Most of my money is on Fidelity. They're not really a place where that is meant. I mean, they have an active trader platform. I don't think it's very good personally. I'm on it. It maybe it's just my computer that it's slow on, which very well could be the case. It doesn't run well for me.
Well, yeah, I mean, if I hadn't already had an account set up at Interactive Brokers, I would maybe look at something like, Fidelity or Thinkorswim.
Thinkorswim is pretty rock solid,
right? Like something that gets you what you need.
Yeah.
Whoa.
Right.
Just try refreshing.
Thinkorswim is pretty rock solid, but in terms of like, if you want to go down the line and be like, what's more simple than Thinkorswim? Honestly, like my YOLO accounts at Webull. Webull to me walks the line extremely well of being simple and easy to use, but also like they've got a ton of information on there. And I'm talking about the mobile app and the web app. There's just a lot of information, a lot of good information. It kind of reminds me of TradingView in a lot of ways. And I know they use their charts, but I think Webull in terms of just like usability is very good.
So this is my.
You're not sharing anything.
There we go. I am now.
Okay.
This is my Interactive Brokers, I guess, homepage. I mean, I don't have any position. I have $197 of cash in this account and no.
Wait, what's that from? Is that old?
The cash?
Yeah. Is that what you transferred?
No. I haven't transferred it. Yeah, this was old that I had. I had like some money in there, and then I had one share of Disney that I sold. Like, I had literally one share of Disney, and that was my whole portfolio. It was one share of Disney, and I sold it like a week ago. So now I'm just all cash. So I mean, okay,
all cash, no breaks.
What do you want to look at? Like, let's.
I don't know. I'd be curious to also get our guest thoughts on this. But here, Disney's right there. Just do Disney. I'm just curious, like
so if I wanted to buy a share,
but we're on the website.
Correct.
Okay, we're not on the app, like the actual trading software. We're not on Interactive Brokers, like
they have like a desktop app
trading platform. We're just on the website. This is
their browser trading platform.
Yeah, the browser based platform.
Yeah, like if I just wanted to buy a share of. That's one thing I don't like. It always thinks I'm trying to buy 100 shares. I don't have that much money.
Well, not yet. you got to move the money over. That's the point, right?
I know.
All right. I'm curious what broker our next guest uses. And I'm going to bring him on right now while Aaron finagles with his brand new interactive brokers. Well, it's not new. It's his old but new, his lost but found interactive brokers account.
Yeah.
And while he does that,
I also have an E-Trade account, but I didn't get approved.
How many accounts do you have?
I didn't get approved for trading options at E-Trade, so
Do you just have an account in every single brokerage with like $100 in it?
Robinhood, Interactive, E-Trade, Merrill Edge is where my Roth is.
Dude, consolidate, man.
That's what I'm doing.
You gotta consolidate. Holy,
it takes a while.
All right, Asif Suria runs the Inside Arbitrage website, which we'll talk about that. We'll talk about his newsletter that goes in every single weekend, because I've been reading it every week for, like I said, like 6 years. It's ridiculous how consistent it is. So let me bring Asif on right now and get him on the show. We'll give him the special intro because he's a brand new guest. Hey, welcome to the show.
Welcome. Thank you for having me.
It's a pleasure to talk to you, because I've been, like I said, I've been reading your Insider Weekends newsletter for years. You are a machine when it comes to like consistency. Every single week, I know you're going to post an article about the top insider buys and sells from that week. So it's a pleasure to finally meet you. First off, I've been just reading your articles for a long time. I'm curious. I always find it fascinating when someone decides that a specific niche or a specific area of the markets or investing, that's going to be theirs. And you've decided that insider transactions is going to be yours. What is it exactly about insider transactions that you find just so interesting?
Well, I'm assuming you're Spencer. I've never.
Yes, I'm Spencer. I'm Spencer. Sorry,
Spencer. I'm Aaron. Or you can call me AB or Aaron, whichever is easier.
And thank you for reading Inside Arbitrage for the last 6 years, Spencer. We've been doing the Insider Weekends post for about 12 years now. And
12 years?
Yeah, we've been publishing.
Oh man,
12 years continuously. What got me interested was, I started out as a value investor back in 2001 after the dot-com bubble burst, and I did that for almost 10 years, and then moved towards event-driven investing, merger arbitrage, insider trading. What's fascinating about insider trading for me is you have a group of insiders, company management, directors that probably already have a lot of exposure to the company. They probably get a lot of options. They have a lot of their net worth invested in the company, and yet they use their own money to go and buy more stock on the open market. And that's fascinating. You're making a bet saying, I strongly feel this company is going to do well. That's one aspect of it. And that's not always the case. Sometimes they buy just to signal the market, just to tell the market, hey, I think this looks attractive at these levels. And that might not necessarily be the case. So it's about figuring out if they're buying because this is a great time to be buying the stock. They probably know something that's going to happen maybe 6 months down the road or 1 year down the road, or they're attempting to just signal the market and try to build up confidence in the stock, if you will.
There's always that saying, there's a million reasons to sell, but only one reason to buy, right? So do you ever think about that? Because like you see someone selling some company stock, it could mean that they're buying, they're getting a pool and they need to fund the pool, right? Like it could mean anything.
That's exactly right. On the insider selling side, and we've done some analysis on that, we've read through a bunch of academic research on it. The signal on the selling side is very weak. The signal on the buying side is actually quite strong. So if you notice over the last 6 years that you've been reading it, we mostly focus on the insider purchases.
Yeah.
We list the top 5 insider sales for the prior week, and every once in a while we might call attention to them. But for the most part, it's all about the buying. And the other thing that I find interesting about the buying is it helps me discover new companies that I would have not looked at otherwise. I think that's the most exciting part for me. I open it up on a Saturday morning and I'm like, which new companies are going to show up that I've never heard of before and I've not looked at for a really long time.
Are you just using SEC filings as your source?
Exactly, yeah. So you said I'm like a machine. It's actually the machines that do a lot of the work. We grab
I
data
knew
from-
it. I knew it. You're not human.
we grab a lot of the data from the SEC. We grab it within seconds of a Form 4 filing being filed with the SEC. And then we actually use machines to come up with the structure of the post. And so when I open it up on a Saturday morning, the post is already structured for me. And then I just have to go in and add content and do the analysis, which is usually the fun part.
That makes a lot of sense because these posts are long.
Yep. Yep.
Is there a specific kind of insider buy that is worth more than others? Obviously, like the CEO, like a founder or a CEO is worth more than a director. But outside of that, is there a frequency, a quantity, a timing, anything that signals to you, this could be something?
Yeah, a cluster of insider purchases, right? So if you see more than one insider buying, that's interesting. If it's an independent director that's buying and the director has an investment background where they understand how to value securities, that is interesting to me. Because as much as insiders might know about the business, they might not know how to value a business. That might not be a core competency of a CEO or the VP of sales, if you will. So when I see an outside independent director buying that has the investment background to be able to determine if this is the right time to buy a stock and if it is undervalued, that's interesting to me.
Is there a way, Asif, to see, like you mentioned, a cluster of inside buys from different directors? Is there any data out there where you can see kind of like the percentage of employees taking stock, like stock option as part of their salary?
I'm not aware of that. You can pull up a symbol on the Inside Arbitrage website and see all the insider transactions along with option exercises.
And then I was going to ask about the option exercises too, because from what I understand, they've changed how option trades have to be filed with the SEC. Is that correct?
I'm not aware of that. We
They
still
cha-
continue
okay.
to see them.
But
on
so option trades over a certain dollar amount have to be filed with the SEC, just like common stock purchases do.
Yeah, so if you exercise options, you have to file them in a Form 4 as well, even if you don't end up selling anything. Usually what you see is somebody will exercise options and they'll sell a small portion of that to cover the tax implications of that exercise. And so you got to distinguish that sale from a regular sale. So we look at insiders and see if a bunch of insiders are exercising options and not selling the stock. That is a positive sign for us as well.
Do you ever use insider transactions as a signal to do something on you for yourself?
Oh, absolutely. I would say a big portion of my personal portfolio is based on insider transactions, merger arbitrage, spin-offs, and so on and so forth.
Interesting.
Steve, I want to bring up a specific name. So I've been tracking this for the past couple months.
I knew this was coming.
I've been looking at Asana, and Asana's CEO Dustin Moskovitz. I've added it up. He's added more than $1 billion worth of stock in the last 6 months alone.
Yeah.
I mean, that's a big bet. We're talking about big bets here. $1 billion in 6 months he's thrown into his own stock. I assume you've been tracking this. I want to know if you have any thoughts on that, thoughts on Asana. But then also, have you ever seen anything like that? Like, have you ever seen someone buying that much of their own stock?
Not this much. This is huge. I just tallied it up right before our call, and it's $1.2 billion that he's purchased starting in June of 2021. And he was buying, $10 million worth to begin with. And when he started his first purchases, in the footnotes of the filing, he indicated this was part of a 10b5 trading plan. So you knew that there were more purchases coming down the road. His first purchases were cheap, right? He bought them at $39.28. And then he went all the way up to $100, and the stock shot up well beyond that. And now it's come back down to earth, but he still continues to buy. So no, I've never seen anyone buy $1.2 billion worth of stock, considering his net worth is something like $12 billion.
Wait, yeah. So in 12 years of doing this, you've never seen an executive buy his stock with such ferocity and as Dustin Moskovitz in Asana right now. Wow.
No, and you don't get a lot of executives that are worth $12 billion either, right? That have the ability to buy $1.2
Oh, that's
billion
true.
worth of
That's
Well,
true.
that's what I thought was interesting because I was seeing all this. I was like, this guy just has to have a ridiculous amount of money. And I think when I looked at, I saw his net worth at like 9, 10, we'll call it 12. Either way, 1/12 of your net worth isn't nothing. Like that's pretty significant, right?
Yep.
And I
Yeah,
also should note that Asana does report earnings this afternoon.
Tonight.
Tonight. So if anyone is hearing this thinking, oh, I'm going to go out and rush and buy Asana, maybe you want to wait till after earnings, or maybe you want to buy before. I have no clue. It's not investment advice. We know Dustin Moskovitz has been buying before earnings.
He's been buying it for the last year, say 7 months. That's wild.
Yeah, it's been crazy. At one point, the stock was trading at over 50, 60 times sales. Forget about earnings. It was trading at 60 times sales. Now it's down to about 22 times forward sales. So it's definitely down to earth, but it's still expensive. And Asana has a lot of competition. There is Smartsheet, there's Monday.com, there's Atlassian. So it's in a competitive space, but they've executed really well. Growth rate for next year is supposed to be 54%. So they're still growing quite rapidly.
Well, I'm more interested in the fact that you've never seen this before, because it's one thing for Aaron and I to say this is a lot of buying, but for you to say this is a lot of buying, I think holds a lot more weight. Something else you pay attention to, Asif, is the sell buy ratio, right? Where you're tracking, okay, like overall picture here, is there more net buying or is there net selling? Where are we right now, and what does that tell you?
So there is more net selling. That's usually the case. You'll find that insiders are selling 20 times, 30 times as much as they buy. That's not uncommon. There's also some seasonality between the months. So when you look at January, when companies are about to report results, companies are in quiet periods. So you're not going to see a lot of insider transactions. But right after the earnings season, you're going to see a spike in insider buying and selling. Right now, we are seeing a little bit of a spike in selling, but it's not so significant that we would draw any conclusions from it. The one time we saw very significant insider buying compared to selling was in March 2020, when the market dropped almost 20%. And for the first time in over a decade, we saw that insiders were buying more than they were selling. And that was a strong macro signal for us at that point.
If only I had paid attention to that. I'm wondering. I bet you there's also, I'm sure, like seasonality as it pertains to the end of the year, and also like I would imagine around tax season. I would imagine maybe around like late March, early April, you get a lot of consistent spikes. I would assume.
Yeah, we see some of that. It's not as significant as we see at market extremes, but yes, you're going to see seasonality for various reasons, especially if people made a lot of money last year and need to pay taxes come April.
Right.
You're likely to see some selling.
Awesome. Asif, is there any other, like, are there any things on your radar, any insider transactions from the last few weeks or few months that you want to highlight for us aside from Asana? Anything on your radar here that sticks out?
Yeah, it's been interesting to see a bunch of insiders from retail companies buy stock. So we talked about an insider from Dillard's buy stock, and the company is also buying back its own stock. So we see this combination of insiders buying and the company buying back stock. Whether they are at they're at a place where they had a cyclical peak and they saw better results that might not repeat themselves in the future. That remains to be seen. But we're seeing a lot of insider buying and buybacks in the retail sector. There's a small investment bank called B. Riley, RILY is a symbol. I've been long that for a couple of years. We saw a cluster of insider purchases in that investment bank. And
oh my God. And the PE is like below 5 and the dividend yield's above 6. This looks interesting.
It's phenomenal.
I gotta look more into B. Riley, but I really like this on first look.
Yeah, they've been phenomenal. They've issued several special dividends over the last couple of years, and they've positioned themselves for the next down cycle by acquiring a company recently that focuses on restructuring. So it's a fascinating company. The founder is still the CEO.
What's that big? I mean, I know the markets have been down the path, but was there any specific news to this company that why it dropped down? 36%?
It was that acquisition. So
Okay.
when people looked at that and they said, maybe things are going to change in capital markets and we're not going to see as much M&A and IPOs and SPACs. That was part of the thesis with Riley. So with that part of the business coming down and them making this acquisition, the stock dropped.
Got it. Jason Raznick in the chat saying you gave him ARNA.
Yes, the merger arbitrage situation. The spread is pretty much completely closed. So hopefully Jason made some money on that. It was a $100 buyout from Pfizer. And I think when Jason and I spoke, it was probably 92 or 93 at that point.
Hey, merger arbitrage. Speaking of that, Activision, where's ATVI at right now? Activision, I still own this thing. All right, it's at 80. Takeout price is 95.
Oh, 95.
Huge spread.
Wait, 15. We got a $15 arbitrage there?
Yes.
Let's get in on that.
Yeah, so there's a significant regulatory risk in the Activision purchase by Microsoft. It's obviously Sony and Electronic Arts would be concerned about Microsoft picking up Call of Duty and not releasing that on the PlayStation. So there are some concerns there, regulatory concerns. It would be great if it goes through. I've owned Activision in the past and would love to see this deal go through.
Yeah, as would I, Asif, as would I. Guys, Asif Suria runs Inside Arbitrage. You really should check out the website. The link is in the description of this video. As I said off the top, Asif, it's a pleasure to finally actually meet you after reading your email, your newsletter every week for God only knows how long. So thank you for coming on Benzinga Live today. We'd love to have you on again soon to talk more about insider transactions.
Thank you, Spencer and Aaron. Thank you for having me on.
All righty. Man, that was a blast for me. That was one of the favorite.
I told you I was onto something with Asana.
No, I didn't say you weren't.
I know. But like you said, it means more from him saying, I've never seen anything like this. If you're just joining us, Asif said in his 12 years, he's never seen insider buying like what Dustin Moskovitz, the CEO and founder of Asana, has been doing for the past year or so, adding more than $1 billion worth of stock.
I just put the link up on the screen there. That's insidearbitrage.com that goes to Asif's website. He sends out his weekly roundup. It's in an email, it's in an article, it's on the site, it's in a few places, so check it out. Yeah, let's make a note here to reach out to Asana.
Yeah, I mean, it'd be great to have Dustin on, but even if it's not Dustin, someone from there, I mean, we use Asana. They should want to come on.
We've been a customer for like a decade.
Yeah, Luke said we were very early as far as customers for Asana go. Fried Chicken Man said, Jason, you need to come on. Fried Chicken Man, you need to tune in more because Jason was on yesterday.
Yeah, where were you, Fried Chicken Man?
Where were you, Fried Chicken? He was probably re-upping on some fried chicken.
Fried Chicken Man 7 was here, but Fried Chicken Man
8
was not. I don't know what that was about. Anyway, that was fantastic. Okay, mental note to reach out to Asana.
Well, no, let's not make it a mental note.
Zoltan.
Let's write it down. I'll write it down right now.
Zoltan, reach out to Asana. I think he's done that before, but we got to get Dustin Moskovitz or someone on the show.
That is one thing Jason's definitely right about. Writing things down makes it a lot easier to.
I told you that.
Okay, well, you and Jason.
I tell you that all the time, man. That's why I have the doc.
Asana.
That's why I have the doc.
All right, it's written down. It's on my list now.
Oh my goodness, 12:03. We have not looked at the markets yet. I feel like that's ridiculous of us. So let's go over. Hey, does anyone know what today is? Today is the 13th anniversary of something. Does anybody want to guess what today is the 13th anniversary of? March 9th, 2009.
Oh, that was the first time I ever kissed a girl.
Besides that, does anyone have a markets guess as to what today is the 13th anniversary of? It's a stock market history thing. I'm waiting for the chat. Our chat's a little bit delayed. Today is blow account up day. No, Journey. Maybe. Zunaid's son. That would be good guess, RJ. Good guess. It is not the iPhone, but a good guess. This is a stock market history type of thing. Shelly is on the right track, I would say. She gets half credit for that. Yeah. Okay, we're getting a few people that are on the right track. The stock market bottom of Asif is there. He is in the chat. It's amazing.
Oh my god.
He was there. He knows what today is. March 9th.
What was his name? Mark Haynes?
Mark Haynes on CNBC. Rest in peace. called the bottom. It's called the Haynes bottom. Look it up. Let me pull up a chart of the SPY, not Activision. Let's get that off the screen there.
And by the way,
666 was the low.
wait, really? Right on the dot?
Really, right on the kisser. 666, March 9th, 2009. The bottom of the Great Recession in the stock market, the S&P 500.
You see a lot of people calling tops all the time. We pulled up that graph the other day of the Rich Dad Poor Dad author calling for different tops. It's a lot harder to call a bot. Well, it's not harder, but it takes, to me, more cojones to call a bottom, because stocks are down 50%. And you're like, yeah, buy. Yeah. Everyone's like, what are you talking about? The market's shit. But he called the bottom on the CNBC. That's incredible.
Oh, man.
Mr. Resnick.
Jason's here. What's up, Jason?
How do you turn off the huddles in Slack?
How did we turn off huddles?
Wait, Jason, can we talk about Slack yesterday? Oh, you were on my Slack?
Wait, how did we turn off the huddles? I don't know. What do you mean? You mean like the feature? Or how do you get out of one?
Get out of one.
There's that little switch there on the bottom left, like of the window. Like it's a button. It goes left and right. You know what I mean?
It's just a toggle.
It's like a toggle thing.
Yeah. But you have to do it on like every channel or.
I did it. Thank you.
You're welcome.
Okay. So yeah, a couple things. I did buy Arena Pharmaceuticals, made about 10% on it. I wasn't joking. I want to take over our insider pages. We have great insider pages, like for insider trading. We have some of the best technology, and I wanted to Sif to take that over and then have his product on there, because I did do Arena Pharmaceuticals off him. I'm liking the movement in Callaway today. We're up some ducats. Yeah, baby. There the insider pages are. That's what I was missing all day in my life. You know, like, so.
And this is how I found out about Asana, by the way, Jason. I was sorting by what the biggest insider buys were, and I saw Asana's, and I was like, holy cow. So I got in on that because of that.
I know why Spencer's uncomfortable talking about Asana.
Wait, Jason, can you make sure the right microphone is selected?
It's fine.
It's fine.
He sounds fine to me. Why, Jason?
He doesn't sound great to me, though. Sounds
fine.
Well,
I'm using this headset my wife just got me for my birthday 2 days ago, and I want to know if it's good. So is it not good for the microphone?
I mean, it's a gaming headset. It's okay.
No, it's an Apple fucking headset. Apple the Max.
Oh.
So I don't think it's select, or something doesn't sound great to me. So someone help me out in the chat. Does Raz's audio sound okay?
It doesn't sound crisp. We can hear.
All right.
It
How about now? How about now?
No, nothing's changed.
Nothing's changed now?
No. Back me up on this. I don't feel like anything.
I don't know. But right, Jason, I found something out yesterday when you were on my Slack. So I had my Slack signed into a community computer here, and Jason was on it. Jason was getting a lot more responses, way more quickly than I would on Slack, by saying, "Hey, this is Jason Raznick." So my new plan is to anytime I need something done, to just say, "Hey, this is Jason Raznick. I need this done," and people will be quicker, faster, more responsive.
That's the trick.
So
just lie. It's the
but can you guys hear me?
Yeah, we hear you okay.
Ricky Bobby says it's mostly good, but it fades into robot mode.
Well, that's more to do with his connection, I think, than anything else.
All right. Well, can you guys just hear me okay right now? That's what I need to know.
Yes. Yes, Aaron, we can hear you.
Aaron Bree, why are you in the studio? Aren't you supposed to be outside doing those pranks for a half an hour today? You said you would do it. Is it because you didn't write it down, as me and Spencer have tried to teach you your whole freaking life?
I told Spencer I'd start the show with him, and then we do the show till 2 p.m. We got 2 hours.
You know what stock I made a bunch of money on, guys? I mean, I'm not advising it for your listeners, but FXLV. F is in Frederick, X is in xylophone, L is in Leslie, V is in Victor. What? I said Leslie.
Wait. Okay. What is this? I never heard of this company. What does it do?
You never heard of F45?
That's what I just said.
Spencer, come on.
Ooh. F45, Mark Wahlberg investor. It's these rotations. You go through the circle, you spin around, you get 45 seconds on each thing. It's 45 minutes. It's for ADD people. It's amazing. It's awesome. Now, if you go to the Benzinga insider trade pages, you'll see that the CEO and president have been buying shares. So I bought about what do I own? I own about 24,000 I bought of it.
Yep. CEO President Adam Gilchrist added more than $1 million worth of shares in December, as well as a couple different directors.
All right, I have an idea. Why don't we start an insider trading show, like insider trades, so that way we can bring on the executives who are making the insider trades, like biggest insider trades of the week. We do a show like 3 days a week. What do you think?
Well, I think great minds think alike, because I actually reached out to CEO Watchlist today, our good friends we've had on the show, and we're going to have a phone call. And I had pretty much the same idea. Well, I was going to do it as a recurring segment on this show where they come on, CEO Watchlist comes on.
I'm saying we could start a trend in the markets. We call it the biggest insider trading show in the world, and all the CEOs want to appear on it because we only bring on the ones that make these that are sweet. So it's like how all the CEOs want to be in the Business Hall of Fame or be on CNBC or some shit like that. We have the largest insider buys of the week, and we bring the CEOs on to talk about them, or the executives, not the CEOs.
Let's do it.
Let's start with Dustin Moskovitz, since he's the king. He's the GOAT.
Wow, he's saying it. See, we didn't ever go to it why Spencer is uncomfortable talking about Asana, but he just said, let's start with Dustin Moskovitz. He's the GOAT. Spencer Israel, there's a rumor that I've heard that you are cousins with Dustin?
Because we're both Jewish? That's racist. A little racist.
I mean, I don't know if it's racist. Is this not true? Are you not cousins?
Not true.
Moskowitz and Israel?
This is not true. This is
really.
I don't know where your information's from, but it is not. It is incorrect.
I heard that you shared the same doctor who did your breasts, both of you.
That's funny.
Is this not true? Is this not true?
I hope my parents are not watching this. By the way, no.
Can we explain to the Gentiles what a brisk is?
No, we can't actually. But if you want, you can email us and we can explain it there.
Wait, Zen Bullish, you want to go 24/7? All right, we need you from 12 to 2 tonight. Let's go. But what a brisk is? No, guys, I'm sorry, I didn't mean to make Spencer uncomfortable. But yeah, they might be cousins. So
we're not really. If we were related, I would have called him and say, "Hey, yo, cuz, can you help me out for a minute?" But we're not related.
He doesn't have any money. He used all to buy Asana stock.
No, he's got a lot more money than that.
My only stock that's down today, guys, is DTE Energy and what is NECB? I own this too. I don't know what the freak that is.
That's the
I don't know.
Oh no, that's something that Tim Melvin gave me. No, Tim Melvin gave it to me.
Community Bank. Community banks.
That will be a big win. I promise. That one will be a big win.
It sounds like it's similar to the ticker that was going to merge with Apex, NTSB. I think that one was.
Yeah, I have some great stocks these days. I mean, I got stocks like here. I'll give you a stock. Let's go. Hold on. Let me do the day game view. Let me open my Benzinga Pro. If you're not using Benzinga Pro, you're such a hoe. But hold on,
Jason.
A hoe is a garden tool, Spencer. Don't be inappropriate.
Jason,
okay?
Please.
Why is your mind so dirty? Jeez.
Please.
I have a lot of hope.
We have our next guest is here judging us right now.
Spencer, I'm not trying to be rude. I have a lot of hoes in my backyard. I was doing the grass all day yesterday. I was because all the leaves are coming down. You know, it's the winter is over. Maybe
Spencer said he'd rake. Spencer said he'd rake the leaves for you.
Only if I got invited. I said as my present to Riley for her bat mitzvah, but I wasn't invited, so that's a no go.
How do you know you weren't invited?
I didn't get an invitation. That's how I know. It's okay. I'm not mad.
I'm
not mad about it.
Wait, has anyone received an invitation so far?
I don't know. I'm not mad about it. It's okay.
Wait, Raz, did you get the invite?
Wait, Spencer.
Spencer's wedding. Did you get the invite for that?
No, but people who don't invite me to their wedding are just dumb. Like it's a dumb.
What the hell, Spencer?
No, but think about that, guys. I want you guys to listen in. We have 400 listeners. Before I tell this story, because this is going to be one of these stories that you're going to want to hear. Let's think about this. First of all, if you're listening right now, go like on YouTube, hit the like button, and then share this with your friends, because me and Spencer are going to get serious here. Okay, so did I make Spencer's wedding list? No, but let me continue. No, it's okay. I'm not upset. It's totally good. If I was someone like this guy Elliot Lane got married in Kentucky, works at Benzinga, he should have invited me because he should just want the gift, because typically your boss or whatever your CEO is going to give a bigger gift than the average person, right? And so these guys don't.
The invitations didn't go out yet. Just to be clear.
Well, they didn't. Shit, I thought I got out of that gift.
I was playing a little prank on
Just to
you
be
guys.
clear, the wedding is not until November. Just to be clear, okay?
I thought I got out of that gift.
Yeah, it's funny.
Okay.
No, but now you're even now Spencer's going to invite you.
Yeah.
And now you have to get him.
I'm over here. I'm over here sweating.
Okay,
All
hold on. So, but now I'm not done with this. So the bat mitzvah, Luke Jacoby is like, so he was like asking who's invited from Benzinga, and he like said your name, Spencer, like it was first, like you would obviously be invited. And I'm like, Luke, why would Spencer be invited? He's like mean to me half the time. Like he's not like he never calls me and tells me anything, you know. And like when you got engaged and so, you never told me. And so he goes, you know what he said? He goes, because you know he's like Jewish and does all the like he does like Shabbat and stuff, you know. I was cracking up, you know. But
right.
Yeah, Spencer, you and your fiance are welcome to come, but you got to dance it up, and you have to know what the Hava Nagila is. That's okay. So let me just say,
is he gonna be one of the ones holding Riley up on the chair, or they not do that for bat mitzvahs?
No, they do that.
Okay,
they do that. They have to hold me up.
Oh, all right. Spencer and I will be holding you up. We'll make sure you won't fall.
Well, Aaron, that would have to say that you're invited. Can I tell you there's a big celebrity coming?
No. Do you want to tell us, or you want to save it for next time?
A big celebrity singer.
I mean, I was gonna bring like Jack Fox, Jared Goff, maybe, but it's fine if I'm not invited. I won't.
I'm not invited either.
It's fine.
Okay, but the big celebrity, I think we're gonna get Robinhood CEO coming, Vlad. I want Mr. Callaway. But okay, the stock that I've been kicking ass on is KURA. Buy it.
And Kira Sushi.
Wait. No.
Spencer went
No.
there.
No. KURA is not that.
Oh.
That's it's a different. I made that same mistake too last.
You guys
week,
know what? Press 1 if you want me to come and do my own show a half an hour a day. Press 1. Press 2 if you don't. Press 1 if you want me to come do a show every day. Press 2 if you don't. Okay? I need to know now because that's it. And I'm going to commit. Spencer's going to find me a time, and I'll do a half an hour every day. Press 1 if you want me to. 2 if you don't. I'll talk about anything and everything. I'm going to be very open. If I have to fart, I'll let it go. I don't care.
All right, and I want to preemptively. Aaron Shaften is our next guest. Is coming on here momentarily as soon as we wrap up.
Oh my God! You got Aaron on?
He's right here. He's coming out. He's backstage.
No, I didn't know that you had Aaron on. I'm sorry. I don't have a backstage. This isn't like backstage. You know those like the porn sites is backstage things. This is not that.
Listen, why?
Why? You're saying I'm backstage. I'm not in the backstage.
No,
you know?
Jason runs like a website.
Why?
He's got to know what goes on at all different. That doesn't mean he frequents those websites.
I've never been to any of those sites.
No, he just knows the technology behind because you got to know that shit when you run a website.
They call it a casting couch or something. I don't even know. By the way, Aaron Bree, please go do the freaking pranks. Okay, I'm dying for it. I'm honestly half an hour due to.
Did you see the one? Did you see the one on the ice rink?
No.
Oh my God. Okay. Jason Raznick will be coming on. On a recurring basis. I just don't know. I'll find him a time.
KURA is the one that I was saying that I own.
Yeah, Vivi gave it to you, right?
No, did she?
I'm asking.
I think I've heard Vivi talk about this.
No. This is a hedge fund manager that gave it to me. He gave me 2 stocks. I mean, I have new stocks, baby. Like, one of them I don't even want to say because I think it'll be so controversial. But I got new stocks, baby. I do.
Save them for next time, whenever that is.
Well, no. Well, aren't I coming on tomorrow morning?
Sure. Oh yeah, that's true. You are actually. He is coming on tomorrow morning on pre-market prep. I forgot about that. So that's the next time. So.
But I will tell you guys, I will not be me. I will not be like I am now in pre-market prep. I'm too scared of Joel and Dennis, or Joel specifically, so I won't say some of the stuff I said. Like,
thank you.
You know, we won't talk about Spencer's cousin Dustin, you know, and the bris. But It was. By the way, at my bris,
casting couches.
Wait, Aaron, at my bris, I think they cut too much.
Jason,
no, wait.
Jason Raznick is the founder and CEO of Benzinga.
Legitimately, I'm not even kidding. Something similar happened to me. You can talk to we can bring my mom on and talk about it. I don't care.
We're not.
We're not
But Jay,
comparing.
but Spencer,
we're not
Jason-
comparing body parts.
We're not doing this.
No, not live. But I don't know. Either way, but yeah, Jason's invited me to the bat mitzvah, but he said my breath smelled, so I couldn't come. So if I get my breath fixed, I'll be able to.
You should get your breath. I mean, if you want to.
I think I have to get my tonsils removed. I'm not even kidding. Like,
I mean, that one day at the Lions, that one day at the Lions game, I had to move over 2 seats, but I didn't want to see it.
I know.
It's terrible.
I had a tonsil infection.
Okay.
Then Luke
Jason
told me that he told you. Luke told me he told you about your bad breath. So there was a girl next to us, and Aaron had a kind of a crush on her, and then
It's my
she's
friend's
like,
girlfriend. I don't have a crush on her.
and then he had bad breath. So
all right, Jason Razik will be on
But it'll
pre-market
be
prep.
fixed before the bat mitzvah.
What is CPSH?
I don't know. Oh, it's a stock. It's up 30% today.
If you guys can help increase Benzinga's traffic, want to write for Benzinga, and you could write quick little articles in like 2 minutes and turn them around, send me an email, jason@benzinga.com. All right. I love you. I appreciate you. Spencer, sorry for coming on unannounced, but I got really excited when you had Asif on that stock because Arena has done well so far. Your show is great. Your setup looks great. Your background looks great. Everything about you looks great. And guys, if you haven't congratulated Spencer, congratulate him on his engagement.
You don't have to congratulate me.
No, say Mazel Tov. Mazel Tov, Spencer.
Thank you.
No,
Thank
to
you,
Spencer.
Jason.
Yeah, Spencer.
Okay. Yeah. Okay. All right. Man, this show went off the rails today. Let's bring Aaron Shaften on. Let's go back to the plan of the day was to have Aaron Shaften on at 12:15 and from DealMaker to talk about what's going on in the Reg A space right now. They just made an acquisition, and I want to talk about just general deal flow right now in the midst of what is happening out there in the world. So let's get Aaron Shaften on the show right now. Aaron,
what's going on, guys? It's nice to see you, Spencer.
It's good to see you, man. Wow, how do we segue off of?
How do I top that last?
Whatever that.
You got to bring the energy.
Whatever that just was. So the reason we started talking last week is because DealMaker, you guys made a deal.
We did.
That's a little meta. DealMaker acquired Ridge Growth, the agency. Just for people that don't know, your DealMaker is a platform that enables Reg A and Reg CF and Reg D offerings, right?
Yeah, we let companies raise money via all those exemptions from their followings and their fans or whatever on their own website.
These are like, if I could put it in a way that's not necessarily compliance approved, but is easy to understand, kind of like pre-IPO fundraisers in a way.
Private financings, right? I think
private financing. There we go, where you can raise money publicly in just not smaller than an IPO, right? Essentially, I'm just trying to.
Yeah, I think people are, there are lots of ways to raise capital, and you can do a traditional IPO, or you can leverage, some of the newer exemptions from the last 2 years, like Reg A plus, like Reg D 506C. You can raise money from the crowd with different caveats depending on what you're doing. And since technology keeps getting better, you can do it right from your own website.
So you just acquired this other company, Ridge Growth. Why and what does that do?
Sure. So the team at formerly Ridge, now called DealMaker Reach, they are really brilliant digital marketers. They come, I'll tell their story as well as I can, but they come from kind of the traditional digital marketing world of direct-to-consumer e-commerce. They found place to do digital marketing, investor acquisition for primarily Reg A plus offerings. And we started working with them mid-late 2020. And the fit was just immediate. They're a very sophisticated organization. They do really, really strong digital marketing. It's a data-driven approach. They really understand the space. We found that the issuers we shared as customers, they were benefiting a lot from the work they did. And the formerly Ridge team unlocked more capacity to do those analytics when they were using our system because the experience was right on their customer site. So it was a natural fit, and we shared a lot of customers since mid 2020, and it made sense to really bring the teams together. And it's a pretty exciting time to be a team member at DealMaker. I think it's probably even more exciting to be a customer or a partner. It's just a natural fit.
Let's talk about that because there's a lot of uncertainty in the world. There's war, there is inflation, there is a broad-based squeeze in many commodities and raw materials around the world that has implications for most companies, because almost everyone uses a raw material in some way, shape, or form. Amidst all that uncertainty, how is that translating to your market, to the Reg A market, and just in terms of deal flow and deal activity right now? Because oftentimes deal flow is seen as a proxy for confidence, right? The fewer deals that are out there, the less confident people are, but it picks up as confidence increases. So what is the market like right now?
I think that's an interesting question. It's a little hard to say. To be honest, like the volume of people coming through Reg A transactions is way less than like a major exchange, obviously, for example. So, I do think we have seen to some extent, maybe there are some folks who are delaying the launch of an offering a little bit, but at the same time, people who are investing in Reg A plus offerings, at least from what we've always seen, they're looking for diversification in their portfolio, right? They're taking some money aside and putting it in a speculative vehicle, a private investment, something that traditionally would be reserved for only very wealthy investors, right? It's providing that kind of access and that kind of portfolio management tool to a retail investor. I think, maybe that's a strength of this offering, right? Is it allows you to put your money into places a little less correlated to the broader market in times like this. But I mean, obviously that's not financial advice. That is a little bit of what we see though.
I've always been interested in the Reg A space because kind of what you said, it is sort of the public, it's the public market's answer to private equity, to venture capital, to angel investing. And I just want to be clear, and this is what everyone who participates in those areas knows, that there is like long tail, like the idea of like the long tail, in that a very small number of companies account for a majority of the gains, is a very real facet of this marketplace. Would you agree with that?
Probably broadly, yeah. I think just like any private investment, right? Your return is nowhere near guaranteed, right? They're speculative for a reason.
Right.
I would say, taking a step away from Reg A for a second and just talking about like raising money from the crowd. We were really proud recently to be working as the tech platform underneath the Green Bay Packers common stock offering. That's a totally different kind of setup, but it made a lot of us on the team think about what it means to be kind of someone who's invested in something early. Like when people purchased shares of the Packers, they weren't doing it to realize a financial return, right? Yeah. They were doing it because they believed in the organization, and it's the pride of that ownership. I think when you think about what it means to invest in an early stage company and what it means to win investors as an early stage company, like how much of the return is financial, obviously that's a component. But a lot of what you're looking for is kind of like that emotional return. You're supporting something you believe in. I think we're seeing a lot more companies who have kind of a brand or a community as a resource understand that, not only can they deliver that kind of financial return to people potentially, but they can build in on the emotional benefit of winning an investor. And that's a very powerful tool that I think transcends even the market itself.
And I know I've asked this before, but are there specific kinds of companies, or how do I phrase it? Are there specific sectors or industries that are more present on your platform, or that tend to do more of these types of offerings?
That's an interesting question. I think, there's obviously a bit of a tie-in to what generally the market sees as attractive. So there was a time when cannabis was all the rage, right? And a lot of Reg A offerings were cannabis. Recently, we've seen some bumps in like carbon capture and carbon credits, for example. That's been a place where a lot of investors are eager to get into something early. Also something they believe in, right? There's like an overall benefit to investing in things that make the world a better place. And we've certainly seen a bump of stuff like that on the system. I do think it depends. There's stuff also that's always around. There are always resources companies who, can be an attractive offer to people. It'll vary a lot.
I've observed, and this is just my own observation, that consumer packaged goods companies, consumer products, consumer brands tend to be more active in the Reg A space because they have a retail product that you can identify with. I don't know if that.
I think you know what? I think it's a great point. That idea of turning a customer into an investor and an investor into a customer obviously is most salient when you're talking about like a CPG brand. You know what? I don't think we've even seen the best. We haven't seen the best version of that yet, right? You know, Brewdog is kind of the story that everyone talks about. Brewery in the UK that brought in people in the Equity for Punks campaign, and you know, that's still the case study that we quote for packaged goods a lot of the time, even many years later. I think the more sophisticated the space becomes, there's access to more technology, there's access to great investor acquisition services. You know, we're going to see bigger brands not only go after these, you know, types of offerings and execute them really well, but we'll see them buy into it more when they do. I'm waiting for the time when I walk into a store and see a QR code to invest, right? Like that's the, I think that's next.
Ooh, that's next. That's cool. I could be into that. Aaron Shaften from DealMaker, talking about the Reg A, Reg CF, Reg D space. Aaron, a pleasure to catch up as always, man. Next time you guys make an acquisition or have some news, drop a line my way.
Will do. It's a pleasure, Spencer. Thanks for having me.
All righty. Have a good one.
Cheers.
All right. We have on the calendar, guys, that David Lee from AppHarvest, it will be joining us. We have that on the schedule. He is not here yet. So when
Zoli? Does he have the link, Zoli? I just got a message from Zoli. He will be joining at 12:33.
Oh, he'll be joining in 2 minutes. We were told. Sweet. So yeah, you go.
I was just gonna take this time to
look at AppHarvest.
Well, I was gonna explain what AppHarvest does.
Please,
maybe we want David Lee to do that.
No, you should do it.
Which, by the way,
and then we'll have David.
His name's David Lee.
Yeah. Not David Lee Roth. Whoever made that joke earlier.
Who's that?
David Lee Roth. Oh, David Lee Roth?
I was talking about David Lee, the basketball player.
I know.
That he's from St. Louis.
Oh,
wait, is that his name? The guy that played on the Warriors?
Yes, he played for the Knicks for many years.
He played David Lee played at Chaminade in St. Louis High School and then went to Florida. And then Bradley Beal played at Chaminade in St. Louis and went to Florida as well. And then Jason Tatum played at Chaminade and broke the trend, went to Duke instead of Florida.
Bummer.
I know. Well, I don't care about Florida.
Anyway, you can see we have the AppHarvest chart up on the screen, and this came up on the show. I think it was Monday, I want to say. Maybe it was Friday. Someone asked us about AppHarvest because, as you can see, guys, it's been ripping. It's been ripping, and we were asked for our opinion, and we kind of gave it, but we were like, well, we're not really experts in this one. We don't really know. We don't know that much about the company, so let's just hear directly from the company if we can. So we reached out, and David Lee, the president, is kind enough to join us today on Benzinga Live. So he's here now. We're going to get him on the show, and we're going to talk all about how AppHarvest sort of fits into this entire global commodity uncertainty situation. Mr. Lee, welcome to Benzinga Live.
Oh, thank you for having me. I'm excited to talk to you today.
So we did our best. Actually, no, we never even got there, I don't think, to explain.
I got sidetracked talking about David Lee, the basketball player.
Yeah, we were going to explain what AppHarvest does. Then we got distracted. But you're here now.
This is the reason why my Instagram handle is another David Lee. There are many others. But I'm happy to talk about this David Lee's focus on AppHarvest. I'm excited.
Yeah, so because we were asked, as I said a few days ago, just about your company and sort of how you fit into what is essentially a worldwide squeeze on commodities and raw material prices. How does AppHarvest sort of fit into all that?
Well, in many ways, AppHarvest represents the opportunity to create food security right here in the United States. And as you're looking at our chart and our recent performance, there are really two things to talk about today. One is what's happening in the world broadly and how companies like AppHarvest relate. But there's also a lot to talk about the company itself. We really are at a turning point in our ability to be increasingly self-reliant financially, but also operationally having a good year of some trials and tribulations under our belts with a lot more confidence we know how to run, not just one, but soon to be 4 very large tech-enabled controlled environment ag facilities that allow us to get to, financially a place that I think we couldn't talk about until very recently. And I'm happy to talk about both. What are you guys interested more in? This notion of the need for food security, or specifics about what we're doing about it at AppHarvest?
I mean, kind of both in a way, but I want to follow up to what you just said. You've been public for what is it now? It's over. It's been over a year, but it's really
A
not
little
that
over
long.
a year. Yeah.
A little over a year. At various points, you've lowered guidance, you've raised guidance, and you've seen probably firsthand that, I'm sure life as a public company, the market can be very unforgiving, right? In terms of the quarter to quarter performance, even though you and every other C-suite executive out there will beat the drum all day and say, this is not about the next quarter, this is about the next, 2, 3, 4, 5, 10 years. Be that as it may, though, the market tends to, be very unforgiving on a quarter to quarter basis. So, you've, I'm sure, experienced that firsthand, but have you been surprised at all at just the market's reaction as you guys you're still a relatively young company and you're very young as a public company. Have you been surprised at the reaction as you've sort of gotten your footing here?
Well, I personally haven't been surprised by much of the broader market. I'll tell you, it's hard not to be surprised when a company grows as fast as AppHarvest. Remember, we only started being listed on NASDAQ in February of last year. The company didn't exist 4 years ago. We probably went from 5 employees to well over 500, and we're going to add another 500 to 550 great living wage jobs in Appalachia who are creating opportunity in the region for folks that have been stymied by the demise of the coal industry. So we're growing very fast. We stood up during COVID a 60-acre, a 24-hectare Moorhead, Kentucky first facility, and we planted and operated it for the very first time in our first year of life as we went public. So the dynamic growth of the company is extreme. And I think along the way, we learned how to execute better and better. It was a very challenging moment in the summer when we took down the guidance and reset the bar. But what it allowed us to do is to improve execution, improve management, and get back on track. And remember, this is a company that produced 18 million pounds of tomatoes in its first year as a public company. And it's going to, by the end of this year, not just have 1 facility, but another 3, a quadrupling of growth. This is also a company that, when I say we're going to go from 1 to 4 farms, I think some of your viewers may think, well, that's cute and precious. That's over 100 acres of producing capacity. It may be one of the fastest growth stories in controlled environment ag, certainly in North America. And when you grow that fast and you are that ambitious, both for our mission, but frankly also for our investors, there's no question that there were lessons learned. A big part of that was ensuring that we had the right leadership in place to run our farms. We promoted Julie Nelson, who we had hired a short 6 to 9 months ago from her time at places like PepsiCo running the food business. And that improvement of operational rigor has given us the confidence to come out, for example, today and say, we are ready. AppHarvest is ready to continue to grow along its mission. And I think the world needs it. We always talked about how the UN says by 2050, there'll be 9 billion hungry mouths looking for food, and that climate change won't allow broadly the world to make enough food unless we use technology. But if you read the headlines today, if you think about how will the United States ensure it has enough food security? How can the United States and how can AppHarvest be a part of the story of self-reliance and create resurgence economically for an important part of the country, which is Appalachia? I think our story is more relevant than ever. You see headlines about countries that are withholding exports of commodities, including food grades. And it highlights the fact that self-reliance, which is a very big theme for us at AppHarvest, is going to be critical if we're going to feed the hungry mouths here in our own market. producing locally means that we don't have to, 70+%, some argue, of all the vine crops, the tomatoes, the peppers, the berries that we consume in the United States, come in across the border, shipped oftentimes for days or weeks, covered in harsh chemical pesticides. The idea that we can create an industry right in Appalachia that serves better quality food locally and creates better jobs is I think, a solution that really is needed today. Our stock price is up over 50%, I think, in the last month, while we are trained not to look at our stock price day by day. I think maybe
sure it's
investors are beginning to come around to the idea that companies like AppHarvest are required.
In terms of what will stand in your way, if for whatever reason you don't, accomplish your mission, what would have had to have happened? What is the biggest headwind for you?
It's interesting. At when I was running the food business at Del Monte, there were questions about, will consumers want to eat my next product? Product market fit would have been a risk I could have talked about on your show back in the day. The good news for us is there's more demand than multiples of the supply that we promised today. People enjoy tomatoes and berries and green leafy products and peppers. The industry, the top 1,000 retailers and food service providers already have made the move to controlled environment ag and can't get enough. Our partner, Mastronardi, one of the better, I think, perhaps the best sales and distribution partner here in North America for controlled environment ag, has told us that they will take every pound of product that we can make because demand goes on and on and on for a better product like the ones we make. So demand is not an issue. For us, and by the way, nor is technology. The technology of today that we have is more than sufficient to generate something like a 20x yield improvement versus open field farms. We will fail if we don't execute. We have to just day in and day out deliver what we say and begin to execute. And I think with the Q4 2021 financial release, I'd like to hope that is at the beginning of demonstrating that we can exceed the guidance that we put out, which we did both at top line and in terms of adjusted EBITDA, and stay on track at the same time for the future growth, quadrupling our farms by the end of 22.
Do you get a sense that the events of the last couple of weeks, or is there anything to indicate that the events of the last couple of weeks have opened people's eyes more to just how reliant we are? When I say we, I really mean everybody. How reliant everybody is on wheat from Ukraine, for example, or how reliant we are on other countries, and should something happen there, we are vulnerable here. Have you seen anything to indicate that more people are suddenly realizing and caring about that?
Well, I think even before the last month or so of headlines, COVID, I think you saw consumers change how they thought about food in particular, because oftentimes we were at mass sheltering in place and spending more time determining how we consume food right at home, or certainly less in the office. And that thoughtfulness, I think, persists to today. I think the headlines of today do make it much more clear the fault lines of food security and the need for the United States to lead in agriculture again. And for us at AppHarvest and for our peers in controlled environment ag, that's about using great technology, but also using climate to our advantage. We use 90% less water because arguably Appalachia is getting wetter and wetter. We recycle all of the rainwater that falls around our farms, and it's not a small amount. It's something like 70 Olympic swimming pools large at our Moorhead facility. I think that understanding that America has to lead in agriculture and food production again, and needs to do it for its own consumers, is a theme that's going to go well beyond when this geopolitical crisis abates, frankly, because the market requires it.
Question from the chat here. What potash do you use?
What podcast do I use?
Potash.
Oh, what potash?
Potash,
If you think about, I think there's some misconceptions about how we make our product, right? So we recycle all the rainwater, we use great seed, and we use a hydroponic system where we don't have dirt in the ground, we don't have harsh fertilizers, we don't have runoff. And as a result, our tomatoes taste great, don't have those harsh chemical pesticides, and we don't have a lot of the compromises like how you manage soil and the erosion of it to deal with. And that'll be true not just of our Moorhead facility, which it is, but it'll be true for all of our 4 farms as we make berries and green leafy and peppers.
David, excuse me, David. About a year ago, I know the plan was to open about 12 farms by 2025. Is that still the plan?
Our internal target remains to be at that level of scale, but I think we've learned that the market wants to know what you're going to do more in the short term. So you'll see in our Q4 release, talk is cheap when a company is reset guidance, which we did. So our goal is to promise and deliver quarter in, quarter out, and to go from 1 to 4 is in line. 1 to 4, meaning by the end of 2022, is certainly in line with previous projections to get to 12 by 2025. But right now, we're not wasting our breath promising something in 5 years. We're really focused on what we're going to deliver this year.
So I'm really interested, kind of location-wise. I mean, I know you guys are based in Kentucky, Appalachia, like you said. I mean, there's a lot of farming and agriculture done in that area. Have you found that there's like more or less interest in maybe places like, say, in like the Northeast, like in rural Maine? They might have a harsher climate than Kentucky, but have land that'd be suitable to grow in. Is there more of a demand in those like Northeast regions or regions where they have a harsher climate?
Well, what's interesting is demand for crop that could be grown year round from our facilities is nationwide. Location, as they say. We are within a day or two's drive of 70% of all consumers of produce in the United States. If we were to choose to be based in just one coast or the other, you create logistical expense and lack of access for other parts of the country. And we wanted to be centrally based to serve 70% plus of the population. We also wanted to be, as you note, in places where climate is your friend, where regions are getting wetter. I remember in the early 2000s struggling with the crisis in Central California when I was at the Del Monte Foods business, this public business where I was running the food business. Even back then, people were pulling out peach trees to plant nut trees because of the crisis on climate in the increasingly arid part of Central California. You can read all the headlines for the last several years on how more challenging it is in traditional areas of growth in certain bread baskets. So we wanted to create a bread basket that was relatively advantaged by its location and in case of Appalachia, we believe a great climate. We also wanted to be advantaged in having a network of farms that leveraged a local employee base that really were dying for a great job, a living wage, that had a long-term career, very different than the coal mining industry in the region. For example, when we stood up Moorhead, our first farm, as others are talking about labor shortages and the great resignations en masse, we had multiples of what we needed to hire sign up for a chance to work at Moorhead. So our choice in location isn't ideological, it's extraordinarily pragmatic about how we can serve the biggest part of the market the best way, and also happen to create a great thriving economy in Appalachia.
This is a little off topic, but if you ever want to read about, speaking of California, I mean, there's many articles about the California almond market and just the amount of water that almond trees use and what it's and the legal battles and the regulatory battles and all the drama that is surrounding, because there's been a boom in almond-based products and almond milk and almond butter and everything that uses almonds, but they require a lot of water. So if anyone wants to read about that, it's an interesting
So
topic.
David, it's safe to say that moving or most of these new farms, if not all being built, will be in the area you guys are in currently already, in kind of the Appalachia area.
We're very focused on Appalachia because it, we think, gives advantage to serve the most consumers, and it helps our investors with a business case that has a lot of advantages versus being in other locations. We are open to growth beyond Appalachia, but we have plenty of growth. I mean, quadrupling our farms this year, adding another 500 plus employees. That's plenty of great growth, we believe, for our mission and our investor base. But we're open to any location. It's just we're really focused on the location that we think wins. And for us, that's Appalachia.
One more from 30 here in the chat. Are you using sunlight? And if not, what kind of grow lights do you use?
We believe that you have to use the passive sunlight in addition to having the best technology in supplemental light. We have found that those who are reliant only on technology systems with artificial lighting don't have the same benefit of yield. It's part of the reason why if you come visit one of our facilities, if you come see Moorhead, it's very large. It's 60 acres, but it's also encased in glass because we want to leverage the natural passive sunlight and only supplement when we need to. It's also the reason why we have these water reservoirs. It's the same theme, which is to leverage the natural resources of the region to improve yields and reduce cost.
Well, if you're inviting us out there, we'll come check it out anytime.
Okay.
I hate the heat. He's volunteering.
We love
I'm from Missouri, so Kentucky, no problem.
It's a great part. You know, I largely spent the summer in Kentucky working hard on resetting the business. And aside from hopefully being impressed by what we're doing at AppHarvest, it's a wonderful region to visit.
David Lee, president of AppHarvest. David, last one before I let you go here. Is there any exposure that you have as a business to global commodity prices, be them oil or otherwise?
Well, we talked about on the call that we largely offset what every company faces. You know, every company that uses energy faces higher energy costs. One of our advantages, though, is while we're going to go from 1 to 4 farms, we purchased a lot of that steel, a lot of those required equipment in advance. So you haven't heard us say, for example, as many other public companies are releasing in its quarterly releases, you know, massive exposure to an increasingly costly supply chain, in part because we had shielded ourselves by planning ahead for future growth. The other thing I would mention is that our business is designed to, once it reaches scale, be able to be, through yield improvement and technology, cost competitive and affordable. We're not making high price, precious, bi-coastal food. You know, we're making food that Kroger and Walmart and everyday Americans can enjoy. And that's because our unit economics, if we execute, should be able to deliver a fair return for our investors, even as we're affordable.
Got it. Well, actually, real quick, Spencer, I started with basketball, talking about the basketball David Lee. I was just going to ask this David Lee, are you a Kentucky fan, or who are you rooting for in the upcoming March Madness tournament?
You have to be a fan of Kentucky. I was born and raised in Spokane, Washington. My parents emigrated and settled there, and so I am always rooting for Gonzaga. But it's one of those two that you'll see me rooting for.
There you go. One of those two. So I don't know what the bracket's going to look like, but David's, I'd imagine, might have both Gonzaga and Kentucky in the Final Four.
I don't know if that's
legal.
See.
We'll see.
We'll see.
We'll let it fly. David Lee, president of AppHarvest. Thank you so much for coming on Benzinga Live today.
All right. Take care.
All righty. Shout out, while we were talking to David, shout out to a couple new YouTube members. Shout out Joy. Thanks for coming on. Name. Shout out Inara. If you click on that little join button on our YouTube page, it gives you access to, as of yet, it is just some custom emojis. You get some emojis of Aaron and myself and Mitch, Chris and Luke, and some custom badges. We'll be adding more stuff, though, in the coming days and weeks. Also, Aaron, we got to talk about oil here. So while we were talking to David, some crazy shit just went down in the oil market. OPEC is raising supply, and Iran, was it Iran that?
Wait, for sure?
This is the USO right now. And I'm going to go to my Benzinga Pro news feed.
Dude, I've been calling this since
And I'm going to do a search for the ticker USO. Iran's oil minister says they can increase their output of oil if OPEC Plus requires it. from Iraq. Oh, that's interesting. Oh, I'm sorry. This is the Iraqi. I can't read. Iraqi oil minister says they will increase their output if OPEC Plus requires it. Quote: There is no shortage in oil markets. So the supply and demand is balanced.
Yeah.
There is no shortage in oil markets. That's all you need to know.
That's what I've been saying since day one when we saw these oil prices rising from the war. Why I didn't want to get into a long oil trade, which I was like, oil continued to go up for a week or two after I said that, was because this is all it takes is one headline of them saying, yeah, we can produce some more oil, whatever. And then the other thing I wanted to talk about, I don't know if you saw this over the night, potentially looks like the administration, the U.S. administration, might be trying to cut a deal with Venezuela.
Yes, that's also in the works.
We've over the past few years had not great relations with Venezuela, but last night Venezuela released a couple American prisoners they had there, which was a sign that we're having talks with them, we're working with them, and Venezuela is a big exporter of oil. And like we talked about yesterday, we only at the end of the day import about 7% of our oil or gas from Russia. So for us, for the U.S., who, by the way, we are the biggest oil producer by barrels per day in the world, not as big of a deal for some European countries like Germany that are more reliant on Russia, but we can potentially help fill that 7% void
with Venezuela,
yeah. Or potentially Iran. And honestly, if you're OPEC, and you see us trying to cut a deal with Venezuela, you're probably like,
oh crap,
we gotta reconsider our stance here. And then I saw a headline. I haven't dig too much into this or fact checked it, but I guess the Saudi guy,
Crown Prince something,
MSB.
He's the
MBS.
MBS is the man in charge.
MBS. Apparently he declined a call with Biden and instead
I saw that too.
Was talking to I don't know how true that is.
Let's remember that OPEC and OPEC Plus to extent it is a cartel. It is in their best interest to control the market and have a stable price. Higher prices are better than lower prices, but prices going to the moon creates instability, and they don't want that. They want stability. So it is in their best interest to stabilize the price of oil here. And I know this is a geopolitical story here. That being said, though, Aaron, can you look at the chart with me, please? Doesn't this, and this is on the USO, this is a daily chart. Doesn't that candle from yesterday, isn't that, what's that, a doji? That's a doji candle. That's a sign of a blow off top, isn't it? A doji candle?
I'm not
so
sure.
Just
I'm not a candle expert. I honestly don't even know how candles work, to be honest.
Technically, oh, you want to learn right now?
Well, here's what I'm confused about.
Easy.
It's like when do you get a red candle when like it was actually up that day?
Or, so the
like I get the wicks are the solid part is the open and the close, and the wicks are the where it got to that day.
Yes, exactly. So if the candle is red, it means that the open is at the top and the close is at the bottom of the candle of the. Let me zoom in more. So if it's red as it is today, we opened up here, and right now we're down there. If it's green like it was, let's go a few days ago, we opened down there and closed up there. Make sense?
Got it. Wait, AB in the chat, not me, different AB, is saying, part of me thinks this oil news is a shakeout for a larger move. It definitely could be. And that's the thing, is we don't know. Like, it'll be dependent on what ends up happening. If we do get a deal with Iran, if we do get a deal with Venezuela, I mean, oil prices that 100% could rise from here. This could also be the top. We don't know. It's going to be headline dependent. It's going to be dependent on what's going on in the war, going on with these countries that we're talking to. And I think, bottom line, we should feel grateful that at least in the U.S., I know we have some viewers out there that aren't in the U.S., we're in a better position than a lot of countries like Germany, like in Europe, that they're going to struggle. Yesterday, I heard they'll have to cut their energy consumption by 15%.
Yeah, that's hard. That's hard. It's hard to do.
But with that said, coming out of the cold months, people are going to be using their heaters less. I mean, but at the same time, like, COVID's gone. Demand for oil was already going up before all of this. So there's a lot of factors out there. I just am not we're not in a position to say whether we think oil is going to move higher or lower because we don't know. I mean, like we saw, headline could come out tonight that could shake up this whole thing. Oil could be.
All right. As a reminder, this segment about oil brought to you by the letter O, as in, whoa, gas prices average $4.25 across the nation. That's high.
And so on this note, gas prices will lag oil prices by a few days. So
yeah, that's what we learned yesterday.
I would not be surprised.
We learned that yesterday.
if oil prices continue to move lower, don't expect to see that reflected at the gas pump, immediately. A couple days. If gas. So right now oil is what, 115? It was 130 last night.
I don't have the futures up in front of me because I'm on this laptop.
But
So
say for whatever reason,
I don't know what it is right now.
114. So
Okay,
say it goes down to 100 flat. We will see that reflected in the gas pumps. It just won't be tomorrow or today. It'll be for a couple days.
For a week. All right. Well, let's pivot off of this conversation. The other big headline of the day, actually kind of overnight, was this rally in crypto. We haven't talked crypto at all today, but we're going to go there right now, and we're going to do so with our guest because there was an executive order from the White House, and I guess what happened was Janet Yellen's response leaked ahead of time, and then that was that leak was acknowledgement that whatever the White House is whatever regulation is going to happen in terms of crypto is going to be the approach that they're taking is not going to be a combative one, but more of a softer approach. And crypto markets were just ripping here. Bitcoin, Ethereum, ripping overnight. Here now to talk about this is Adam Dell, who has done many things in his career. But most recently, he launched Domain Money in a crypto investing platform. And let's get Adam on the show right now. Adam, welcome to Benzinga Live.
Thank you for having me.
You, I've done, as I said, many things in your career. You were instrumental in Marcus, right? Marcus by Goldman Sachs. And now you're doing Domain Money. Tell us about what that is.
Well, I think most serious investors recognize that crypto should be a meaningful part of their portfolio, but it's difficult for the average investor to really understand the underlying technologies that make up this asset class. A consumer can buy a Tesla, they can use Amazon, they can buy Johnson & Johnson products, and they can get an understanding of what those products and services are. Very difficult for the average investor to really get their head around Ethereum, Polygon, Decentraland, So what we've done is put together an investment team that comes out of Goldman Sachs and Bridgewater Associates, and we've crafted portfolios of crypto assets that we actively manage, rebalance on a regular basis, and try to deliver great results for our investors without them having to do the work.
So it's sort of like what's like the equity equivalent here? It's sort of like it's not quite I guess actively managed fund, I guess is the answer. It's sort of an actively managed fund approach to crypto.
Yeah, exactly. Most investors can't access hedge funds. We've made the equivalent of access to that kind of investment vehicle available to anyone.
What is your general take on crypto and the news overnight here, Adam? That seems to the regulation seems to have been largely well received.
Yeah, I mean it's a confirmation of information that I already had, which is that the federal government is very actively evaluating the impact of these technologies on our financial system. And it's quite a good day for the asset class broadly, because it's very clear that the administration recognizes the real utility of these technologies in advancing our financial systems and evolving them to be more able to take advantage of technology innovation. So I think it's a great confirmation of a lot of the things you're seeing in the broader crypto market, which is that these technologies are highly efficient and very useful and improving financial systems. It's really the reason I got into crypto. I spent a number of years as the head of product at Marcus, which is Goldman's consumer-facing digital bank, literally working inside the bowels of our financial system. ACH networks are incredibly inefficient. They are archaic. They are proprietary. And blockchains represent a real step forward in that the innovations that blockchains have made available in terms of efficacy, speed, cost are undeniable. And so it's a great day for this market to have the federal government so positively recognize the importance of getting the policy right.
And yet, Adam, there is a foundational mistrust of institutions baked into crypto land. What do you say to those people that are just like, this is ridiculous? This is antithetical to everything that we stand for.
Well, in the same way that any major movement has people who are fanatical and, have a very narrowly defined set of views about how a particular technology or a particular belief system should be implemented. You have the same thing in crypto. You have people who are, unbank yourself, anarchy, remove yourself from any government intervention. And then you have people on the other end of the spectrum who recognize that these set of technologies are really just that, a set of technologies. And while they absolutely stand for the things that the maximalist crowd cares about, access, democratization, more fair rates, opportunities to invest in different asset classes, those core values really matter. But I think most of the institutional dollars and most of the people who think about these technologies in the context of policy decisions recognize that in order for these technologies to become mainstream components of how our financial system works, regulation is necessary.
Yeah. I think you can't have it both ways, right? You can't lament the fact that crypto is not mainstream and it just needs more adoption, and yet at the other hand, not like it when those mainstream actors require certain things to get into the game, right? You can't have it both ways. You can't.
Well, I would say it a little differently, which is, if you take a religion, for example, sort of to my point earlier.
Sure.
You have people who are, zealots on one end of the spectrum. You have moderates, and then you have people who are kind of just lackadaisical about it. And I think, crypto has that same emotionally charged component on one end of the spectrum, which is great as it relates to excitement, the innovation, and the opportunity set that these technologies represent. And so you can have both of those ends of the spectrum coexist at the same time. But as I said, for it to become mainstream, you're going to have regulation.
Yeah, that's fair. And hey, out of curiosity, I mean, I'm presuming you own some crypto. Would you like to share, any crypto that what you like, what projects you like?
Yeah, sure. Well, I'm a large holder of our domain edge strategy, our domain metaverse strategy. Those are both, hardcore crypto portfolios. The domain metaverse strategy includes both stocks and crypto. We've included equities in there that we think stand to benefit from the growing ecosystem of the metaverse. But in our core, our domain edge strategy, which is 100% crypto, the names in there, Bitcoin, Ethereum, Polygon, are some of the ones that make up that holding.
What exactly is the structure here of these strategies on domain money? Because what are they? They're funds, but what exactly are you buying? You're not exactly at me as the end user. What exactly am I buying?
You're buying an individually managed account, so you hold
Okay.
these assets in your name directly, and we manage those portfolios for you. So you're not buying into a fund that is, you know, a pooled set of assets. You individually own the assets that are in each of the portfolios.
Got it. And what is the fee structure here?
We charge a flat 1% AUM management fee against each strategy.
Okay. Okay. And how many strategies are on the platform, and are there plans to add more? And what goes into that?
Yeah, we offer 5 strategies today. We're working on a new strategy that we're about to launch, which is emerging, which is really trying to go a bit further down the rabbit hole for some of the really emerging new protocols that are starting to gain traction. We are very thematic in our approach to constructing these portfolios. What I mean by that is we've really taken an infrastructure view of these investment opportunities. You know, what utility do they contribute to the financial system? What utility do they contribute to the metaverse? We spend a lot less time thinking about momentum and what's the hot coin. We really spend much more time looking at the fundamental utilization, the engineering community behind, the token economics around each of the assets in our portfolio.
Is Domain Money meant to be a retail tool for institutions or anyone?
Well, today it's a retail offering. We've been approached by a number of institutions about distributing our portfolios into the RIA channel and to a broader institutional base. But our focus is on retail and bringing investment opportunities to the everyday investor without the complexity of trying to figure out which coins to buy.
Got it. Adam Dell is the founder of Domain Money. One of the cool things about the crypto space is the sheer volume of new platforms, new strategies, and new ways that companies are trying to get investors into the space. So looking forward to following your progress, Adam. Obviously, you've had great success with Marcus and others. So thanks for coming on today, and I very much am excited to see how Domain Money tracks here.
Thanks very much. Appreciate you having me.
All right. While we're on the topic, guys, let's do our first crypto update of the day. I've not looked at the heat map, so let's do that right now. And I mean, I can guess what it says, right? Come on, we've just spent a few minutes talking about how much crypto ripped overnight here. So let's do that crypto update right now. Oh, yeah. When's the last time the entire map was green like this? I think it's been a couple weeks. Maybe more? Aaron, I don't know. Bitcoin up 7.76% here. A lot of dark green too, which is nice. Look at Luna, or Terra, whatever you want to call it, up 16.5%. FTX token is up 5%. Wow. Bitcoin Cash up 8%. ETH up almost 5%. Wow. Rip roaring day. I just go back to what I said before with Adam, right? You can't have it both ways. You can't wish that crypto had mass adoption and then also get all upset when the things that require mass adoption to happen, i.e. some kind of government intervention. Because that's what has to happen. The government has to get involved for this to become really, really widely available. That's okay. And I think that's what the market is saying today. We're okay with this.
Yeah, and I that's what's been so interesting talking about government regulation in crypto, because there is always going to be people in crypto that see any regulation as negative no matter what. But go out and talk to someone who lost a bunch of money in like a rug pull or something and see if they support any. I mean, Mark Cuban got hit by a rug pull and he came out after and said we need some regulation in this. And I mean, that's the thing. If cryptocurrency is going to be here to stay and going to be a currency of the future, there needs to be some sort of regulation. Does that mean the government should step in and control everything? No, of course not. But should there be some things that are allowed, some things that aren't allowed, some things that help provide more security for investors? Of course.
Yeah.
Of course. And that's what we're seeing in the markets today, is they're saying, hey, like, this isn't some doom and gloom executive order that's going to come and shut down this whole industry. No, it's more, how can we work to ensure that this isn't something that's going to adversely affect a lot of people, which there have been a lot of people who have been hit hard by, whether it's a hack, whether it's a rug pull, whether it's just a scam project. So, yeah.
Yep. And I think it's Easy Mike who's dropping the who mentioned Marathon and Riot. I do want to mention here, and I'm going to bring up a watch list that I have of all of the major crypto related stocks. Guys, check this out here. Not everything, almost everything is green today. Look at this. Oh, I'm actually missing the big one.
Coinbase?
I'm missing Coinbase. Wait.
Coinbase is about 10% today. And honestly, I mean, like, okay, so just doing quick math in my head. In November, when Bitcoin was at all-time highs of, what was it, 65,000?
Something like that.
Something like that. Coinbase was $350 a share. Kind of as Bitcoin was moving up to those all-time highs, Coinbase was moving up higher. Bitcoin traded off. Coinbase followed. But I think percentage-wise,
this Coinbase has been so tough.
Coinbase from its highs is it's 50% of its highs right now.
Well, the all-time high was on day one.
No. I'm talking about of those highs in November. Sorry.
Oh, so yeah, that high was 368.
Right, and so we're about half of that right now, 174. Yeah. But Bitcoin hasn't been cut in half. Coinbase has. I think there's some arbitrage there.
I mean, potentially Coinbase, like the brokerages or Coinbase is an exchange. So, well, no, it's not an exchange. It's a broker. Their business is in a lot of ways is tied to volatility, because volatility drives interest, and interest drives new accounts, and new accounts drive business, drive revenue. So I mean, it's pretty correlated, man. I just brought up Bitcoin on the screen there. Bitcoin's in purple. It's pretty correlated.
Yeah, but my point still stands. Look, you can see right there. Coinbase is down 45%, whereas Bitcoin's only down 33%.
Yeah. I mean,
I'm not saying like, oh, Coinbase has to move higher because Bitcoin is higher than Coinbase was. I'm just saying if Bitcoin does move higher, then I think Coinbase has a lot of upside, because you will see if Bitcoin moves higher, which I think Bitcoin's chart looks good right now.
Here,
trading.
Let's add Robinhood to this.
Trading will increase. As well.
That's not relevant. Let's take that off. Yeah, I mean, so Coinbase maybe moves with a higher beta because it's got there are other factors, because there are all the things that affect a public company, right? All the things that affect a business that won't affect the price of Bitcoin, right? I mean, new account creation, average revenue per user, insider transactions, options, all these things that impact the price of Coinbase that have no bearing on the price of Bitcoin. So it is interesting that it looked like for a time there, Bitcoin was actually trailing the price of Coinbase in a way, and now it seems to have flipped. That's interesting. It's a pretty strong correlation nonetheless. And as a reminder, I know we're talking about Coinbase, but as a reminder, these crypto segments that we do are brought to you by Voyager. If you want free Bitcoin, it's very easy to get. Just go to Voyager, create an account, sign up using the code ZING, Z-I-N-G, fund your account with $100, make a trade, and they will send you $50 in free Bitcoin just for doing that. Check out there. Wow. I feel like we have not talked about, we didn't even talk about Netflix today.
Oh yeah, that's what the thumbnail.
That's what the thumbnail is, and that's the title of the show.
I did talk about my Netflix call that I have. Let me check in on that right now.
All right.
It was up 400%. It's only up 300%.
Let me bring up my Netflix chart here. This is the reason I wanted to bring this up is because if you're watching pre-market prep, you already heard this, but Michael Pachter is an analyst at White Bush Securities. He's been an analyst there. He's worked there for a long time. For as long as I've been at Benzinga, I have an eyelash in my eye. Oh my god. For as long as he's been at Benzinga,
Who has been at Benzinga?
sorry, for as long as he's been at Wedbush, Michael Pachter has been bearish Netflix. I think he's been bearish Netflix since like 2013.
Since they were shipping DVDs.
I think since 2013. He's had a sell rating on Netflix. So let's bring up a chart here. He's been bearish Netflix since like somewhere around here where my mouse is. Today the mouse is working. So he's been bearish all the way up. Not anymore. This morning, Michael Pachter did something he has never done to Netflix. He has upgraded his rating on the stock to neutral. One of the biggest Netflix bears on Wall Street. And this hasn't impacted the price at all. As you can see, he was wrong all the way up. Although there are obviously moments where pockets of time where he was right. He's turned neutral. He's not throwing in the towel. He's saying Netflix got to my price target. I no longer hate the stock here. Does that mean that it's time for us to take a flyer on Netflix here?
Well, some people in the chat are saying time for us to short it because this guy seems to be wrong about Netflix all the time.
I don't think that is the solution to this. I think if you're shorting Netflix now, we talked about this the other day. This thing has gone from $700 and the low. What was the low? $350, $340. It lost more than 50% in 5 months. It lost more than 50%. Let's zoom in a little bit. That's a little better.
Okay, what kind of chart are we on right now? Daily?
This is a weekly.
All right. Can you pull up the RSI on the weekly? Because we were looking at this with David Green yesterday, and it was
RSI,
he said we were going back I think we were on the monthly, and we were going back, and we could not.
Oh, look, it's oversold. Sorry.
And we could not find any time in the last 5 years that the RSI had been that low.
So RSI, for those that don't know, it's a very simple indicator to understand. Basically, if the purple line is above the purple line.
I'm saying the purple line is above the purple zone.
Yeah, okay. If the purple line is above the purple here on this screen, that means it's quote unquote overbought, which could be a sell signal. If it's below the purple, it means it's technically quote unquote oversold, which means that could be a buy signal. However, there is nothing in the RSI that indicates how long a stock can remain overbought or oversold for. It could remain overbought or oversold for a long period of time. So that being said, it is saying here the stock is oversold. So we've got a technical indicator that supports the buy thesis here. I mean, are we interested, Aaron?
Oh, I'm long Netflix here all day. All day.
Let's go with daily.
All day.
Do we have any support? What's that low? 351? What's that low? 340.
See, I'd be looking for support if I was looking at it for a swing trade, whatever. I'm long Netflix as a long-term investment here at 340, right? And here, I just think there's some things, try to simpler is better, right? Don't overthink. To me, Netflix is a monster, right? We saw how well it performed during COVID. We're back at pre-COVID levels. In COVID time, Netflix made a lot of money and grew a lot of business. Obviously, Netflix trades with the Qs and big tech for the most part. So we could continue to see more weakness in tech in the Qs for sure. But I think from a long-term horizon, I'm talking 10 years down the road, I feel very, very confidently that Netflix will be trading higher 10 years from now than it is today.
I broadly agree. If I'm trying to find the note, because I had the note on my desktop.
I was also thinking about this because
here it is.
I guess in House of Cards, there are some like political events or like things that are similar to what's going on right now.
Okay.
And I've never seen the show.
Oh,
but
it's a good show.
I think that was Netflix's like first
Yeah.
big original.
Yeah, it was.
It was?
Yeah.
Kevin Spacey. Canceled.
For a good reason.
I disavow Kevin Spacey.
For a good reason.
So can I not go back and watch it?
It does make it difficult to enjoy. I don't know if I would recommend you watch that show. It's a very good show until the last season or the last couple of seasons, but it does make it hard to enjoy. That's for sure.
Yeah, they just said it has Kevin Spacey in it.
Yeah.
I mean, I enjoyed Unusual Suspects.
The usual suspect. It's the opposite. It's not unusual. They're usual. That's the whole point, right? Michael's thesis here. Netflix's. I'm just going to read from his note here. Netflix's recent price increase signaled a few things to us. First, the company is approaching market saturation in the U.S. and Canada. Hence, it determined that the benefits of raising prices on roughly 75 million subscribers vastly outweighed the impact a price increase is likely to have on subscriber growth in the region. Second, the fact that Netflix raised prices across the board in US and Canada on only 4,000 subscribers in their emerging markets and not all in the rest of the world suggests that the company expects the vast majority of its future subscriber growth to come from Latin America and APAC. And APAC is the Asia Pacific region, I think. The problem with this strategy is that subscribers in other regions, Latin America and APAC in particular, are of exceedingly low quality, generating average revenues well below the $14.78 average revenue per user that Netflix saw in North America in the fourth quarter. Yada, yada, yada. I'm just skipping ahead a little bit. Netflix is, quote, soaking its highest revenue subscribers to fund future growth overseas, suggesting that the North American market is relatively price inelastic. That's key. While the other regions may be far more sensitive to prospective price increases. In other words, in North America, we need Netflix to survive. They can raise prices all day, and there's nothing we can do about it because we're not going to unsubscribe because we need it. That's the takeaway.
Yeah, and I mean, what I'll say on the Latin America, Asian front, we talked about that a lot with Netflix, especially when Squid Game was going on, right? That the company expects a lot of their growth to come from that region. Here's companies like Netflix that grow a lot, that are international companies. They face problems like this. Great companies are able to overcome these problems. Netflix, in my mind, will be able to find a way. Right, you have more people. You have more people in those countries, in India, in Asia, in the Philippines. So with the greater quantity of people, you can get the same amount of money from a lower price point than you can charging, Americans where there's fewer people, a higher price point. The question is, and like you read in the thing, it's not as profitable to do so. So if Netflix is able to find a way to cut costs in those regions to make it profitable to offer, say, in India, a $5 a month subscription to Netflix, that's one of those problems that Netflix can and potentially will be able to figure out, and that will help its stock price.
You know what we haven't done in a while, Aaron?
Hold on.
We have not looked at the top 10.
We should do that.
You want to do it right now?
Roland in the chat is saying Netflix is going out of business.
Roland. You may hate Netflix, that's fine, but they are not going out of business.
I've got.
Come on, man.
I've got four words for you, Roland. Too big to.
It's
fail.
$151 billion company. Those don't go out of business every decade.
Too big to fail. Those are your 4 words. He's laughing now. He might have been trolling us. We might have just fell for a troll.
Roland, why? No, what was I going to do? Oh, yeah, the top 10. Well, let's take a look. And we are going to be joined by Edwin Dorsey in a second to talk about short selling. But before we do that, let's bring on the Netflix top 10 list. Do y'all want to guess? This is crazy. Does anyone want to guess what in the U.S. I'm talking about? In the U.S.
I'm guessing. I'm not looking at it.
What the
show is Ozark.
Okay, we'll start with TV.
Oh no. Oh, okay.
We'll start with TV. the most watched show on Netflix for the week. This is for the week. This is for last week. This is for the week of the 28th to the 6th. The most watched show in the U.S. on Netflix is Ozark is number 10.
Oh wow! Inventing Anna, is that on there?
That is, yes. I started watching that. Did anyone start watching that? I'm on episode 4. That's number 3 on the list.
Isn't it a real story?
Yeah, I remember reading that. I think New York Magazine.
Yeah,
When it came out.
Anna Delvey.
Yeah, Anna Delvey. It's a very good show. I heard some not great reviews, but I like it very much.
Well, hold on. You know who's the real winner of this? What we just said. So where's Inventing Anna on the list?
Number 3 on the top 10
Number
list.
3. What was number 10?
Number 10 was Ozark.
Same woman.
No. What?
Yeah.
Ozark. What are you talking
Uh,
about? Oh, the same actress.
yeah.
That's what you're referring to.
She's the real winner here. She's got 2 shows in the Netflix top 10.
It's true. Yeah. I'm blanking on her name right now. She's very, very good. Number 1, the most watched show on Netflix for last week in the US. Worst Roommate Ever, season 1. Followed by Vikings Valhalla, season 1. Followed by Inventing Anna. Followed by Love is Blind, season 2, which, because of my fiance, I've seen that show. And I can attest to you, it is as stupid as it sounds. That's number 4. Number 5 is Pieces of Her. Never heard of that. Number 6 is the Kanye show, Genius. Have you seen that one?
I've seen.
It's on my list. Number 7, Sweet Magnolias, season 2.
Does Edwin have the links, by the way?
Yes, I think. Yes.
Okay.
Number 7 is Sweet Magnolias, season 2. Number 8 is Love is Blind, season 1. Number 9 is Cocameleon, season 4. And number 10 is Ozark. Those are the most watched shows in the U.S. last week on Netflix. In terms of movies, number 1 is A Medea Homecoming. Tyler Perry must be the richest man in Hollywood.
Medea. His net worth is unreal. I want to say it's north of 500 mil. I wouldn't be surprised if it's a bill.
Wait,
now.
I'm just going to bring this up on the screen here.
Yeah,
so
it might be a little easier.
Yeah. So here we go. This is the most watched shows, most watched movies on Netflix in the U.S. last week. A Medea Homecoming, Shrek 2, The Weekend Away, Just Like Having Battleship 21 Bridges. There it is. Shrek and Shrek 2. They must be new to the platform.
Wait, are on? Oh yeah, they must be new. Tiny Pie was talking about bringing back Jerry Springer, so I was always more of a Maury guy myself.
Oh my gosh.
Tiny
Pie, you're right. Millennials have no idea the shit that they missed. That show was bonkers.
But wait, aren't you a millennial? Aren't I a millennial?
Yeah, but I'm an older. No, you're not a millennial, man.
I'm pretty sure.
I think you're Gen Z.
I'm like right on the cusp. I'm on the cusp.
I'm like solidly. I'm old enough to remember Jerry Springer. Okay.
I'd say there are a lot of millennials that probably know Jerry Springer. But anyway, he's probably saying Gen Z. He's trying to say Gen Z or Gen Xers don't know.
No, whatever.
Bottom line, that'd be interesting for Netflix, right? To get some live programming like that, a day show,
like a daytime talk show. You mean?
Like for Netflix? I'm just saying some live programming. They've got to have considered it, right?
Maybe.
I'd be about it. I'd watch Maury on Netflix.
Yeah, that show, Maury and Jerry Springer, man, those shows were freaking wild. Oh my god! All right, let's bring on Edwin Dorsey here. Let's talk. Let's get off of the Netflix conversation. The takeaway there though was buy Netflix? Question mark? Not investment advice. Edwin Dorsey runs the Bear Cave newsletter, and he made some waves a few weeks ago with a short report on Roblox. And got some mainstream attention, got some daps. So let's talk with Edwin about that right now and get him on the show. Yo, how we doing, man?
Spencer, I'm great. How are you? It's so nice to see you again.
Looking fresh with the hair. Getting a little poofier.
Yeah, it's poofier, I guess.
Yeah, awesome. Well, we've been meaning to bring you on for like a month now, but it keeps, for whatever reason, falling through the cracks. But I saw your note on Roblox the other week. Mad props, man. That note really got it. That really made some waves.
Thank you. You guys covered the Bear Caves article on Roblox first, I think, before any mainstream outlet. And yeah, there's a lot of problems with the company, but I'm glad Benzinga is shining a spotlight.
For those that don't know what I'm talking about, can you elaborate a little bit?
Absolutely. So I write the newsletter, The Bear Cave, that highlights corporate misconduct and issues with big companies. And 3 weeks ago, I published an article on Roblox, which is a giant kids gaming platform. Like tens of millions of kids play this every month. It went public through a direct listing about a year ago, $30 billion market cap. And because it's a kids game, it's really important to get safety and content moderation down right. And they claim to parents, the company claims that they vet every piece of content that goes on there. It's very kid friendly, but it turns out they don't do that. And they've had a big problem with pedophiles on the platform and kids being abused. They've had a big problem with inappropriate content. For one example, there was a guy in the UK that was arrested for soliciting child porn from over 150 kids through Roblox by buying their in-game currency and promising to send it to kids. So this is a rampant issue throughout the platform. And it's not just like bad users and registered sex offenders who are going on Roblox to try to get contact with kids. It's their own developers. They had an award-winning developer who got in trouble for pedophilia. They've had some employees doing some questionable conduct. So it's just this like widespread platform issue with the Roblox platform. And parents didn't seem that aware of it. But then I wrote about it. There's a YouTuber named Ruben Sim, I think he's 24 years old, that Roblox was suing, who was covering some of the allegations against the company. And then the BBC came out with a big report highlighting a lot of these safety issues and how, there was like, concentration camp themed games on Roblox, even though they claim they're vetting every content that gets up there. So tons of inappropriate stuff with this platform. So I'm deeply skeptical of the content moderation. And I think there's other big issues with the companies.
Can I ask, how did this come across your radar in the first place?
So it's funny. I was just scrolling on Twitter and somebody is like, Roblox management is scum for suing a 24-year-old. And I knew they were a big publicly traded company. So anytime a big publicly traded company is like suing someone young for criticizing them, that piques my interest because most corporations don't do that. So seeing them fight aggressively to try to shut down one YouTube channel. And then there was another YouTube channel that was also criticizing them for safety issues, and the company was pushing back on them, the channel's People Make Games. And just seeing a big company really throw their weight around trying to suppress criticism made me think there's got to be more here.
And to give people an idea of just how seriously the market took these allegations, see that gap on the chart? See that gap right there? Guys, that's Edwin's report, the February 17th. It is one thing to move a stock of a company that is, worth 10 million or even $100 million. Roblox is now it's a $24 billion company. And Edwin's report did that. It made that move. That is a sign that the market is taking this extremely seriously. You agree?
Absolutely. And I think another big issue is a lot of these games, you need to try to figure out the durability of the Roblox platform. And more to me and the people I talk to, this looks like it's going to be a fad. There's been a lot of games in the past that got a lot of attention, like Club Penguin or even Fortnite, as a development platform that let kids connect with each other. And then they kind of fade out because that's what happens with kids games. You get really popular and then it's a fad. And to me, it looks like Roblox is slowing down. I believe the hours played in the US was down year over year for the most recent quarter. They're blaming the pandemic, but if it is just a fad and it's not, this game that'll have a long durability, it shouldn't be trading at 10x bookings and 100x profits or whatever it's trading at today. It's not worth $25 billion.
Yep. And then I want to also give you props. I think what Jay in the chat, you also made a call. Was it maybe even this week even? Or maybe it was last week. It was Jay. Sorry, I'm blanking on the ticker here, Edwin. Gosh, what was it? Well, you just had another report out on JYNT. That's what it was.
JYNT was, wow, that's like 4 or 5 months ago. You'll see.
Sorry. Okay.
I wrote about it right at the peak. Like it was $100 a share. So that was in October. That big 20% spike down is when I put that line right there is when I put out my JYNT article. And basically I showed that there was a board member that had this like undisclosed vehicle to loan money to franchisees. The joint is a franchisor of chiropractic clinics, and it had $1 billion market cap at one point.
Right. We talked about that. Right. Okay. Now it's coming back to me. Damn.
Yeah. The chairman of the audit committee had been on the boards of a bunch of other penny stocks, and they signed people up when they come into the joint clinics for this like monthly renewal, like $40 a month to get like 7 chiropractic massages. And they made those like passes nearly impossible to cancel. So even in the pandemic, customers were stuck paying for these passes, and they were told you need to go in person to cancel. You can't cancel online, fill out these forms. And the thing is, customers always do eventually find a way to cancel services. And what you're seeing now is the stock's gone from 100 to 30, partly because the market had too high expectations for their growth, their franchise base. I think partly because a lot of people are now canceling their subscriptions for JYNT chiropractic adjustments. So that's one exactly. The bear cave got really, really right for the right reasons.
That's not exactly doing a lot for the people that say, oh, but chiropractors are legit. This doesn't exactly help your cause right here.
Yeah, and you know they even had advertisements saying chiropractic adjustments could reverse autism in kids, which is complete nonsense.
What?
So yeah, and I linked to that in the video. It's just disgusting, and they promote that stuff. And I think there were issues with some people taking PPP loans. Another issue they have is when you have a lot of franchises, a big thing is how profitable are the franchise base. Is the franchise base healthy? Are people earning a lot of money? That's a sign you're going to get a lot of growth in the future by people opening up new ones. They were saying, hey, our franchise base is really healthy, but they played a lot of games in determining which franchises they disclose as healthy, which they don't. Sometimes they would acquire underperforming ones, which would skew the metrics one way. And a lot of the people that owned the franchises for the joint were actually doctors themselves doing work within the clinics. And that would boost profitability if you're not paying yourself a salary. So it had this like kind of allure where the numbers looked really good on paper, but then the reality is a little skin deep, and you find there's tons of customer complaints against them. There's misleading marketing. There's a board member loaning franchisees money. They're covering up problems by acquiring clinics. It just had all these problems under the surface that you couldn't get by just looking superficially at the numbers. So I think this is a great example of the work the Bear Cave can do, my newsletter can do, and highlighting corporate misconduct, Spencer.
I don't know, what do you make of the SEC? I think it's the SEC, or maybe it's the DOJ now. The crackdown, I think it's the DOJ actually. The crackdown on activist shorts. Andrew Left they showed up on his doorstep. Carson Block showed up on his doorstep. What do you make of that?
So Spencer, I'm not entirely sure what's going to happen there. I'm curious to see how it unfolds. My guess is the SEC is a very much disclosure agency, and they push for better disclosure of things. So they're going to be looking closely to see if people disclose correctly their positions and the timing of trading around their positions. People have written about this before, but in the activist short world, there's a big thing with balance sheet deals where an activist short seller publishes something and also has a financial deal with the backer who's taking a position and rebating some of the profits back to the activist short seller. I think there's probably going to be some scrutiny on that and whether it's properly disclosed and whether that even arrangements are fully above board. I think that's a little bit of a gray area. I'll remind people, though, for the Bear Cave, I don't short stocks. I don't buy puts. I don't take positions against the companies I write about. And that just keeps life simple. But it'll be interesting to see how it unfolds. My best guess is you're going to see a lot better disclosure around trading for activist shorts, and maybe you'll see some scrutiny for these balance sheet deals. But I'm not 100% sure, to be honest, Spencer.
You do it for the people. You're a man of the people.
I do it for the people. I cannot stand companies that are misleading investors or hurting customers. And you see it more and more now, especially with SPACs. Like, the bad thing about SPACs is most of them are like really small, so they don't interest me. But you see all these nonsense SPACs. And like, if you want to pull it up, AppPhi is one that I was really critical of. Ticker OPFI. It went public, I think, with $1 billion market cap. In just like 7 months or so, they've had 3 different CEOs since the SPAC merger. 3 different CEOs. And this company, claims to help lower income consumers improve their access to credit. In reality, they're just like a payday lender with average interest rates around 140%. And they have tons of consumer complaints. It looks like they pay for positive online reviews, or some of the online reviews are questionable. It's just this SPAC that had all these red flags. It wasn't doing much good for society, in my opinion. People don't need 120% interest rate loans. It's terrible.
Oh, no, of course they do.
It's so bad. And you see all these like companies doing that, and so the SPAC world, there's so many bad companies out there.
It does make you wonder, like, was this just a cash grab? I mean, I'm not talking about the company. I'm talking about like the SPAC, like the SPAC managers. Is this just a cash grab? Like, what's going on here, guys? Come on now.
It's tough to tell, and they'll always say, "Oh, we didn't know, we were defrauded." Even when
the market forces changed the thesis here. Yeah.
I think Early Bird Capital, one of the SPAC underwriters, Spencer, has done 18 SPAC deals, and 17 of the 18 are trading down, which, is a sign maybe you should avoid them. But
that's fun stuff. That's always fun. All right. So you mentioned AppPhi, but $3 stock there. Not really much to say about it as far as a trade is concerned. All-time low, more or less. Is there anything else, any recent reports on your radar? Something you always like to do is you always are very good at watching other short reports out there. I saw there was a report out today, actually. I think it was from, I forget who it was this morning. But you're very good at watching the space and seeing what other reports are out there. Any recent reports catch your eye?
There's this actually new activist, Spencer, Peabody Street Research. They wrote about Reg A Bioscience Holdings. The ticker is RGC. It's this like Chinese medicine company, ticker RGC. My guess is there's not a lot of borrow on it, is my guess. So recent Chinese IPO, and they like make some drug they claim like cures COVID, but it's all nonsense. Like, their main counterparty is the CEO's dad, and the CEO's dad had been like disciplined for some medical misconduct, and he's the one like being their counterparty in a trial, and they put out some press release saying they're curing COVID. And who is the underwriter for the IPO? The underwriter was Maxim Group. That's seen a lot of IPOs from like Chinese companies go to zero. So that's one. And the new activist Peabody Street Research, I think is pretty good, or I like their first report. So that's nice. One I'm watching. Another one that's actually maybe actionable is Vail Resorts, ticker MTN. That's about a $10 billion market cap.
All right. I have thoughts here, but you've probably done more homework than I. So why don't you give your thoughts and then I'll give mine.
Absolutely, Spencer. And I'm not a big skier, so you might have more than me. But they'll, spun out of Apollo a while ago, and they've done a great job acquiring ski resorts and then offering this pass, up to $1,000 pass that kind of gives you all you can ski access to their resorts. And it's called the Epic Pass. It became really popular. They kept rolling up ski resorts, and it did really well. The problem is they just sold too many of these passes, and they've like stretched goodwill too thin. So they pay their workers not really a market wage, often minimum wage, and that's boiled into a lot of resentment and petitions. Because they're selling so many Epic passes, the lines to get on the slopes, there's just too much. There's overcrowding at all their resorts, and that's causing a lot of customer complaints. And then they claim you can get refunds, and tons of customers are filing consumer complaints about not being able to get refunds from Vail. They outsource it to a third party that like makes it basically impossible. So if you get pregnant, I think I included this in the article, you need to be pregnant for like at least in the hospital for at least 30 days of the main season with documentation in order to get a refund, even though they claim you can like buy with confidence and get a refund easily. So that's another thing that you just see things on the edges, that a lot of petitions, a lot of consumers being upset. There's an Instagram account, Epic Lift Lines, that talks about Vail Resorts, and it has like 50,000 followers about all the issues with the Epic Pass. And then you see snowboarders and skiers more and more are saying, hey, we're not going to renew with Vail. We're not going to buy the Epic Pass next year. We're going to go to the main competitor, Icon, or we're going to avoid Vail Mountains in the future.
There's been a mountain, pun intended, a mountain of negative public sentiment on social media about Vail this ski season. They deserve a lot of it. You mentioned the employee wages. I think there was a strike or almost a strike at the main resort in Vail, Colorado. They have notoriously skimped on that front, and that's an area where they deserve criticism for. But also, like, they sold a lot of those Vail passes. Like you said it, they sold too many. Okay. And I guess I don't think that's entirely their fault. They sold a lot, and then it's overcrowded. That's what happens. The ski season's like 4 months long, right? That's what happens. There are crowds. It's not, maybe Vail needs to improve their infrastructure and get new lifts and improve wait times and all that. But people who complain about the long wait times, I think that's the one area where I do have a bone to pick. I'm with you on pay your employees a better wage, make it easier to cancel. But on the wait time front, I mean, it's kind of par for the course, right? Isn't it?
There might be bigger problems in the world and more humanitarian issues than wealthy people spending a lot of time in a ski line. But the issue for the business is, are people going to renew their pass, or are they going to go to competitors and not buy Vail Resorts next year or even this ski season? And increasingly, it looks like people are canceling and going to the Icon Pass, the competitor, or not renewing their Vail Resorts thing. And I'll just read to you what the new CEO, the old CEO stepped down. The new CEO said for their guidance, they're reporting the quarter after Monday, March 14th. And they said their guidance, quote, assumes normal weather conditions from the holiday period onward with no impact from incremental travel or operating restrictions associated with COVID-19 that could negatively impact our resorts. So last quarter, they had a miss. This upcoming quarter, they really hedged on guidance and said there could be other factors that throw us off. My gut feeling is, they're setting up the street to miss because of these consumer issues, because of people canceling the Vail Pass, and then they're going to blame it on other things. But it's going to be this long-term issue. So Monday after the close, March 14th.
Oh, that answers my question. I was about to go look it up. That answers my question. Monday after the close. Damn, that's coming up. Guys, I put Edwin's Twitter handle up on the screen at StockJabber. I put the links to his Twitter and his newsletter in the chat. Check it out. It's also in the description of this video. Edwin Dorsey, the Bear Cave newsletter. Always a pleasure, man. Keep it on. All right. Have a good one.
Spencer, we'll need to do it again.
All right. Have a good one. Interesting question from Christian in the chat. Curious, what company have y'all had the worst customer experience with? Mine,
Comcast.
That was gonna be mine. Will always be Comcast.
Well, sleep number for me too.
I know you had a bad one there. I've probably spent on behalf of my parents. I've probably spent, I don't know, 12 hours of my life just on behalf of my parents on hold with Comcast. It was worse when I lived with them, obviously, because I used to have to deal with that for them. But Comcast is for me number one. Just the thought of having to call Comcast makes me shudder. But let's see. I'm seeing AT&T, Expedia, Capital One, StubHub. I
was gonna say on Raz's for Raz.
Yeah.
StubHub. Raz had a terrible experience with StubHub.
Yeah.
And then he had me looking more into it, and
Oh yeah, Raz wanted to like short this company.
he wanted me to like put hit pieces out on there.
Raz is so. I remember that. That was last year. He was so angry about StubHub.
But what I was gonna say was like I was like, oh my god, like Raz is being whatever. Like it's not that big of a deal. But then I looked into it, and he was right. There are like a million people out there that had the same problems that Raz was having. That yeah. So
yeah. I've been a Capital One customer for I don't know 13 years now, and there are a lot of things not to like about it, but customer service I've actually never had a problem with them on that
I'm trying
front.
to
So.
think. There's got to be more. I think I don't think it's
Jesus is Delta. It's interesting.
I don't think it's specific to Comcast. I think just like internet Wi-Fi providers in general
Oh yeah,
are like terrible
cable
customer
providers. Yeah,
service.
they're the worst.
Cable provider.
They're the worst.
Um,
Joel says he's suing Sprint. Wow. Joel, tell us about that.
Sprint, the phone.
Yeah.
I haven't heard that in a while.
Well, because they got bought by T-Mobile.
Okay. Sprint, T-Mobile, yeah.
Delta.
I've had good customer service with AT&T. Cannot complain there.
I can't complain with Verizon.
I've always had good customer service with Bank of America. Can't complain there.
Oh, Brian, I've heard some nightmare stories about Time Warner Cable.
Oh, you know who also has really bad customer service?
No.
Are all the crypto brokerages.
Because they don't have any.
I know.
that's where they get you.
Imagine like getting your account hacked and losing like all your Ethereum and trying to call Coinbase. Like, what are they gonna do? Like,
what are they gonna do?
What are they gonna do? Bank of America. I've always had decent customer service.
Yeah.
Trying to think.
Spirit actually, if I'm thinking about like the terrible experiences, I've had some real arguments on the phone with Spirit before. Because they'll just up and cancel a flight and you're up shit's creek.
Jesus, I remember. So around that time, Delta, I had a similar experience with Delta. It was like during COVID and their staffing was short or whatever. But I was pissed because I was like, not that many people are flying right now. Like, why should this be that hard? And I was on hold for Delta for a while as well. What about car company? Like for people that I guess it would be more on the dealership front that you deal with customer service.
I'm also very sympathetic to that job. It must be a very difficult job. I did customer service. I did support at Benzinga. When I first joined Benzinga in 2015, for the first 3-4 months I was here, I worked the phones a little bit. And I get it. It's not a hard job. It's not an easy job. It's a very hard job.
If you're a person out there that gets like pissed at the customer service person you're talking to, you have to understand that it's not them. Okay, there are probably times where someone is not doing a great customer service job. Fine. But for the most part, something's gone awry, whatever. It's not their fault. Like there's nothing they'll usually try to help you, whatever. So that irks me when people get mad at like the customer service. So I had
it's a hard job.
Yeah. I had my PlayStation controller wasn't working.
Oh yeah, we heard about this.
Yeah, and I found out. Well, so essentially what happened was I had ordered it off Amazon and I was like a week out of the warranty. So I tried calling.
That sucks.
I know. I ordered it on like February 25th of 2021 last year, and it broke like the first week of March.
That's intentional. It's got to be intentional.
Well, I actually found out after the controller wasn't even broken at all. I was just but either way, like this lady is like, oh nope, sorry, you're out of the 1-year warranty, and it's like I could have gotten pissed and been like, what do you mean? I'm only a week out. But it's like at the end of the day, like Sony's a big corporation. They have rules. This lady's just doing her job. I'm not gonna get mad at her over it.
Hey man, that's the rules of the game. All right. The roadmap is going live next year, guys. And we are coming up on, I think, maybe our best stretch in terms of guests for the roadmap. Not on today's show, but I'm sure they're going to talk about it. I think in the next few shows, I think this week or maybe next, they have a slew of big time guests. I'm talking, oh my gosh. Cool Cats. We mentioned that yesterday. I'm talking Cool Cats and Hello Sunshine. You guys know about them? That's Reese Witherspoon's company.
Yep.
They're Hello Sunshine.
Not anymore. She sold it.
Oh, did she really?
At least like a stake.
Okay. Hello Sunshine and Cool Cats are both coming on their roadmap show. in the next.
Wait, is Reese actually going on?
No, Reese is not coming on the show. That'd be cool though.
Pretty cool.
Yeah. But anyway, they've got some serious momentum on their side over there. So Chris Kachi, Brian Moore, Alyssa Cole, they are going live here in 2 minutes. Yes, Roland. Sorry. Sometimes I am. Is it obvious? He's doing it too.
Yeah.
Don't do it.
Yeah.
Sorry.
I think it's fine. I think it's a joke out there that they like sell a medicine to stop people from shaking their leg. It's like, who cares? It actually burns calories. Good for you. I had a teacher one time who she like took that medicine and stopped her restless leg syndrome, and then she ended up gaining weight because she wasn't burning as many calories throughout the day.
There's no way.
That's what she told me.
Guys, smash that like button for us. Thanks to all of our guests today. Thanks to Edwin Dorsey. Thanks to Adam Dell. Thanks to Aaron Shaften. Thanks to David Lee. Thanks to Asif Suria. And also thanks to Jason Raznick, of course. And thanks to all of you for hanging out with us today on Benzinga Live. Smash that like. Check out the description. There is a discount code in the description of this video to the Benzinga Cannabis Capital Conference. It's 6 weeks away, April 20th and 21st at the Fontainebleau Miami Beach. Come hang out with us. Use the offer code SHOWS30 to get 30% off your ticket. BenzingaCannabis.com is your website for that.
Love you guys.
With that, we're done. The roadmap is here. It is
follow
time.
me on Twitter, AaronBry5, AARONBRY, the number 5.
Don't follow me on Twitter.
No.
I don't want you.